Nice. What's up, guys? Look at
Hey,
that. Hello,
everybody.
everyone. Today we're going to be discussing myself.
And your
For
wonderful
the next,
suit you're wearing there.
yes, for the next 2 hours, it's only going to be me. We're going to be talking
Me,
about what I did over the weekend, which is nothing. All right, how you guys been?
Good. Busy. It was quite a weekend when you were on cryptocurrencies. Like market moves I've never seen in any market. I tried to create, with the help of Claude, a little graphic about what happened there last
Yeah.
Friday, which was the biggest crypto wipe out we've seen, ever, really.
That was insane. That was really
insane.
it was really insane. For those of you who just are tuning in, first of all, welcome and thank you for joining us here today. Hit the like and subscribe if you're new here. If you're not new here, then just hit the like. So I think we can start with explaining for those of you who have been living under a rock for the last 3 days. So what happened here on Friday was that I believe right before, like a couple of hours before the market's closing, Trump started talking about China. Started talking about China bad, mineral
China.
deal bad, China man not doing what's supposed to be doing, kind of like sort of those tweets, right? Then the markets closed, and as you can see, we can switch quickly over to my screen here. This is the S&P 500. If you look at the daily, that's where the daily candle closed. Okay, and I believe it was after the close of the market, Trump came out and said we're going to be adding 100% tariffs on Chinese goods. Which is that's obviously insane, as me and LJ, we discussed this. You explained to me why 100% tariff on China, well, why that would lead to a recession and why it would be destroying a lot of Chinese companies, a lot of American companies, and would put the global markets into a massive recession. And I guess that's why the market reacted as they did. But we also know that most likely this is a tactic from Trump, where he says, I'm going to do the worst thing possible to you, and then I'm going to walk that back so that the least, the effect is still going to be bad, but it's not going to be as bad as, or even close to the actual threat. And we've seen that over and over again.
I really cannot agree to this anymore. I think he's a case of, first of all, I'm going to be very blatant now, not being a very smart person from the beginning.
If you're a Trump supporter, you can leave for 2 minutes.
Yeah, and and I think he has a severe case of dementia, and through that case of dementia, he has lost totally impulse control, which he was not very good with in the first place. I mean, let's be honest. And it's always like this. He gets railed up about something, then he tweets something, and then he backtracks again because somebody in the background probably talks to him, oh, Mr. President, there's going to be these and these effects, recession and so on, not good for you in the long term. And then he basically tries to put the clock back to start. This is what he always does. And the frightening stuff about this is he doesn't, either he's not aware of that or he doesn't really care about the effects that has. And I'm not only talking about the crypto markets, which of course took like the blunt hit of it simply because the legacy markets were closed, wiped out like 19.3 trillion. And we can spin the clock even further into conspiracy theories with this one crypto account that made like $200 million because it opened a massive short position 1 minute before Trump announced that. If you want, you could also like go down conspiracy theory saying like, oh, if he's so smart, maybe he's the guy also behind that account somehow. I'm not saying that. I don't want to accuse, of course, anybody here. But what is going on here, and I say this from the bottom of my heart as somebody who has been besides crypto now, let's leave that aside, but invested for such a long time in stocks, in FX, and especially in single stocks also. This is not an environment where I want to trust my money anymore into the stock markets, by the chance of leaving out a lot of performance, because this is not volatility anybody should deal with, or at least volatility that's tied to an individual person. Whatever mood he's right now in, whatever he feels like tweeting right now, maybe he read something or some Chinese person mixed up his takeout order or what. That's why all of China has to suffer with tariffs. Then I don't know what's going on in the background, but I think we've reached a point really where it's not funny anymore.
Well, first of all, to find some balance and restore the natural order of things. Trump, if you're watching this, I still like you, although after this weekend, probably less than I did before. But you can make up for it. You can make up for it by putting everything to right, making sure that we go back into a bull market, and everything will be forgotten. So there's a lot of things to note here. A lot of things happened, and I think one of the most important thing that happened here was, which is also potentially an argument for why 24/7 trading markets might not be a good thing when you have politicians. Maybe it's a good thing for politicians to have a window over the weekend where they can say weird and stupid things without actually affecting the market. So I don't know. But what happened was something happened with the crypto market, not on Bitcoin. Okay, well, you had on Bitcoin a large move to the downside and could potentially have taken out lots of liquidations of Bitcoin as well, maybe caused a liquidation cascade on Bitcoin as well. But what really happened was on the altcoin market. And I think this is, you've seen on Twitter, a lot of people talking about this as a coordinated attack by a certain group of people. I don't think that's the case. That's just a conspiracy theory without any hard fact. But what did happen was, I believe that this crash activated certain mechanism within crypto exchanges. I'm not going to go into details because I'm not an expert on what happens in the back end, but you had like some auto deleveraging trades. You had trades closing because of this high volatility, and the order books just are so thin on some of these altcoins, even the bigger ones, and there's just no orders in the market to absorb these kinds of moves. So you saw altcoins that people thought were like blue chips altcoins, where they might have invested large capital with 2 to 3 times leverage, thinking they're never going to be liquidated, went from basically went to zero, almost zero in like 5 minutes, and a bunch of people lost a lot of money. And I think the money loss was like 9 billion. Was it 9 billion?
19 billion liquidity.
19 billion, and that's
19
not.
billion.
And I believe that's not the leverage amount. That's actually the actual money invested.
That's probably the leveraged amount. Yeah.
Well, I read that the leverage amount is like closer to 60 or something like that.
Oh, that can be. I mean, I can only say what I read now. Traders. I saw that like 1.7 million traders almost got liquidated.
Yeah. So massive crash in the crypto market. This is the biggest amount of liquidations in dollar value that we have ever seen. Most likely, it was a mix of extreme fear and things happening in the back end of crypto exchanges that exposed the fragile nature of the crypto market, especially altcoins. Something else happened.
You know what the problem is of this whole thing? It exposes the weakness of crypto exchanges. On stock markets, you have like so-called circuit breaker mechanisms. That means like if in a certain time window the volatility gets too high, the stock markets, this is, for example, true for the German stock markets. I believe it's also true for the US stock markets. They will stop trading for like 5 minutes, 10 minutes, and so on and so forth. So there's a fixed window and there's a variable window. So fixed window means if volatility spikes like crazy, all of a sudden, trading stops. And there's a flowing window. If volatility within a period of time gets too high, there's also a circuit breaker. The circuit breaker means that people can reassemble themselves, start thinking instead of just acting, and so on and so forth. These mechanisms we do not have on the cryptocurrency markets, and we saw the effects of this very, very much. I want to give you some examples that I experienced myself, actually, this weekend. On Friday, to be more precise. So, for example, in my algo trading here, you see, like, if you look at the trades, especially to the downside, they look quite good. Like I caught like a lot of the down move and managed to get in nearly at the bottom. The problem here is liquidity was so thin that, first of all, from the alert that a trade should be executed until trade execution, it took almost 30 seconds in 2 instances, which is insane. Which means the exchange I'm using here in the background was just, and it's not a small exchange, was just not able to process the orders anymore. So that's the first flaw. Then the second, which also meant that I got a lot of slippage. Like this trade, for example, which triggered at 13,600, was executed down here. So $5,000 lower. Have you ever heard of $5,000 slippage on a trade? I haven't. But it happened here. Of course, now I have to blame myself for this, of course, because I need to also implement into my bot there some circuit breakers, like if the price has moved too far, is too far different from the alert message, don't engage in the trade anymore. But it also shows like how all these exchanges are intertwined. And if one fails, and that's especially true for Binance, because they provide liquidity to most of the other exchanges, then all exchanges fail. So you have a central point of failure, which are 1, 2, 3 big exchanges, and if their order books run low, instead of having a circuit breaker that says like stop, the whole trading is going to stop now on every exchange for, let's say, 5 minutes. So all the algos, all the traders can kind of reassemble themselves and think about what they want to do and how they want to do it again, and then trading remains again. There's a lot of studies out there for the German markets that this circuit breaker helps a lot, not like to protect people against losses, of course, but to make the volatile movements, the spikes, less severe than they should be. And I mean, in case of Bitcoin, we are talking about one of the largest markets in the world right now. No, this is not like some little altcoin that went under because the market maker went broke. We are talking about an asset class that has several hundreds of billions of turnover every day. I think that really is quite severe and exposes the shortcomings of crypto exchanges. What happened there?
But yes, yeah, I think LJ, you probably have something to say on this.
Call me crazy, but I don't think this is surprising at all. I'd say expected, right? Like, you even think about the nature of crypto, like it's diametrically opposed. Like it's clearly very fragile to these things. It's not like stocks. Like
Absolutely.
You don't have a huge number of market makers out there taking both sides. That's why you can just click buy and sell it any second. The other thing of crypto is everyone is interested in the upside, and they only play out. Most of these projects are kind of worthless. All these altcoin and stuff, it's all just a theory on somehow can become like they're 1,000 times worse than like people speculating on AI. AI clearly has grit, has graft, has usability. The all these crypto coins don't, and then so as well for market makers to even come in there, it's next to impossible for them to know where to fill books properly, to be confident in what the forward and future price will be that they can buy or sell a certain asset at.
I think that's the big
Particularly in
point
those,
also, that a lot of market makers got wiped out very quickly within just minutes or an
and
hour
that's why
in this
the
move. And this
spreads
made things worse,
you get filled way low, because they can't guarantee that if they buy here they can sell there. They have no idea. That degree of variance goes out massively. And the other further trouble is all the exchanges are sort of invested themselves in the cryptos. They want the cryptos to go up. They have massive treasuries themselves. So this is completely different. It would be kind of like the NASDAQ or the S&P or whatever exchanges being invested in every single stock and having interest in the upside of the stocks. They're just there to facilitate the trades, and they make their money separately from the exchange, from fees, from companies being listed, transaction fees, all that kind of stuff. So that's like not their business. Trouble with the crypto exchanges, their business is for crypto to go up. So the other thing as well, in order for them to protect their business if stuff goes wrong, they're not going to fill your orders. They're going to fill their own.
Yeah.
Get that through first, and then everyone else comes last.
Absolutely.
Right? So there's a bit of a what's a sort of conflict of interest in that way.
Yeah. I think that's like we've seen events on a smaller scale like this, of course, also in FX. I remember during Fukushima, also when I tried to fill orders in euro dollar, and I called banks like Julius Baer or Bank UBS. They gave me like spreads of 100 pips because the liquidity was just gone. I mean, that's an event that can be there. The difference is there between them and a lot of or most of the cryptocurrency exchanges, and by the way, also most of the forex brokers. Not the 5ers, they are not a broker, they are a prop trading company, but the typical forex broker business and crypto exchange business is they don't earn their money because of the spreads. They earn money when you lose money. They bet against you. And so they kind of have an interest if things go down the drain to execute you worse, than you would be. And I don't know if that was the case here also. I'm actually surprised that we haven't heard of any cryptocurrency exchanges that went bankrupt because of this. Because maybe a lot of their clients, are like that had like $1,000 in their account, leveraged like crazy, now have a balance of minus 70,000 or something like this.
Yeah. And they don't necessarily make money when you lose money, but they have their own stock they will have on the book that then they have to offload and get rid of.
No,
right?
they run liability. So they
will run it against you. So exactly. And then that goes back to exactly the crypto thing where they're so heavily stacked in the position for this stuff to go up, whereas other market makers and stuff are a lot more agnostic to a degree. And so it feels very reminiscent of like 80s, 90s trading, both in stocks and FX, before computers fully came through and were fully fleshed out. And now everything became really efficient, really fast. Back when like arbitrage was still possible in markets, and now it's been wiped out. So I kind of feel like that's kind of where crypto is, because as much as it's big, and Bitcoin itself it has become quite large as a single asset right now. It's still 72% retail, and that if you got 70% of the participants being retail, maybe they're not always going to make the best decisions when stuff goes on as well, which then further enhances that chaos.
But absolutely, but that brings me also back, and I want to close the circle there because I don't want to spend 2 hours now ranting about politicians and especially Trump, obviously. But that closes the circle for me to go back to what Trump said and the timing of him saying things like this. As a politician, as basically the most powerful politician in the world, probably, you should be aware of things like this, especially him, who's like kind of involved in cryptocurrencies with his own coins and talking about bringing Bitcoin to the balance sheet of or to the reserve sheet of the United States of America. So that shows me again that he is like either following just bare impulses, and then there's somebody always bringing him back and reasoning with him. And but for a position like this is dangerous. Now it happened to crypto, who says in the future is not going to happen to some legacy markets as well. As a fact, it has happened before. Now, even during his first term when he started the first trade wars with China. But it has.
I also see that he seems to do it at certain distinct times when the market's getting hot. He wants to flush out a lot of trades, give that dip, and then you look at it structurally, right? But then you now take another leg up, right? It's like he's trying to structure the market from a technical standpoint as well. Almost the same way like when a central bank does decide to intervene in a currency, they'll look for structural weak points or strong points and then hammer it there so that the rest of the traders also see the same thing and use that to roll into it. It's very curious, very interesting. It will be amazing once this is all, once he's gone or whatever, and people writing papers on each of the block trades and or tweets and how that's leveled up with all that kind of stuff.
So speaking of timing, we had a trade that most people will probably agree that it was somewhat of an insider trade. So there's a exchange called Hyperliquid, and on Hyperliquid you had an account that was created the same day, 30 minutes before the announcement, where Trump basically came out and said 100% tariffs on China. 30 minutes before that tweet, someone on Hyperliquid, on an account that was created that day, 30 minutes before the event, they opened a huge short position on Bitcoin. It was a not sure how big that position was, but it was a very, very big position short on Bitcoin. And in 5 minutes, or I should say 30 minutes after the tweet, it was 1 hour, that tweet, the profit of that trade was $200 million. So the question here is, someone created an account the same day, 30 minutes before the tweet, closed the trade shortly after the tweet, made $200 million, and it was all withdrawn the same day.
There's actually a rumor out there, and it's really just a rumor. So please, I'm not accusing anybody here of that. I'm just repeating what I read online right now, that it was a person called Garrett Jin, who is the ex-CEO of a defunct cryptocurrency exchange called Bitforex, also an interesting name. And the speculation that it's him behind that came up because the address, the Wales address, so to say, was linked to Yin or Jin, and just received like Ethereum worth of 40,000 US dollars last month. And that guy is also, by the way, the largest holder of a Polymarket bet on whether Trump will pardon the former CEO of Binance, the Changpeng Zhao, and where he also bet like 40,000 on. And he's also said to have like links to the US government administration. But it's all just a theory. Of course, by the end of the day, we probably will never know who was it, who was behind it, how are the ties. But when I read this, Jonatan, I had to kind of think what you told me last week about Ray Dalio in the book that you read.
Right. Yeah, exactly.
Where like
and
the real money, where the real performance comes from. That it was like, oh, okay, that's like, these are
Yeah,
the real going on behind the scenes.
Yeah, I mean, the real money, the real big money in the hedge fund space doesn't necessarily come from systematic trading, comes from connections and networks and information, taking positions based on what you might think will happen in politics, based on what Saudi prince you know and talk to, which meetings you had with certain central banks people. I mean, we know, for example, that Ray Dalio had good contacts with the European Central Bank chair at the time when he made most of his money. He were very good friends with a lot of Saudi prince when he made the money on the oil market because of systematic trading after being in meetings with the Saudi princess that is dealing a lot with oil. From all the, had a meeting, and then his systematic technical system made a bunch of money on oil market. Now, the thing here is that everyone watching here, you probably, like, if you lost money in the crypto market, which some of you probably did, because there's a lot of money being lost, lots of people affected out there. So you're probably going to go on Twitter or Instagram, whatever, and you're going to see all of these theories on how this is an orchestrated attack on the crypto market, while in reality, it's probably not. It's probably just a failure, a core function of the crypto market. And this insider trade, while it's very easy to assume that it's just Baron Trump or whatever, is someone in the Trump family like, hey, Dad, do you have any information for me? Let's just open a short on gold. It's very easy to assume. But you have to remember that this all started because of what? It all started because of the rare earth deals in China, which has been known for a very long time in China. So it was like big news in China. So people knew in China that something's gonna go down when this hits the news in the US. So
Yeah.
was it an insider trader from China? Like, we don't know.
There's a
But
million other, countries, entities, all that kind of stuff with their own interests that have this information. Yeah, definitely.
exactly, and information is power, and in trading, information is money.
It's called
And
I'm not uncertain.
I just
Was
had
it from billions, right?
this picture in my mind, like Baron Trump going to Steady. Dad, I want to go out with the boys on the weekend. I need $200 million, for a fun night.
he has apparently made like 100 million on his crypto
Okay,
ventures too. So far,
so
he's
that's
made a
just
lot of
Yeah.
money.
for a fun
Money,
Saturday
that
then.
that dude. I think he's probably a brilliant guy.
But you
Um,
made a very important point, in my opinion. We can, of course, analyze what caused this. We can analyze what are the shortcomings of cryptocurrency exchanges. But actually, and that's good, that's good. But what we should do is we should start at ourselves. If we lost money, and I just, my portfolio went on Friday down, my crypto portfolio, my crypto trading account by 11%. Bang! Just because I don't trade leveraged. If I would have trade leveraged, that would have been much more severe, obviously. And that's just because of the slippage was there. So my learning from this will be, if there's no circuit breaker on the crypto exchanges, I need a circuit breaker in my trading strategy, which either means like if the volatility gets too big, if the spreads gets too big, if like the delay between signal and execution is too large, then I need to have some sort of circuit breaker that just stops my account from trading or my accounts from trading. And because it's always easy, for us traders, and I think we've all been down that rabbit hole to blame others on the outside of being fault of our losses, when in reality, it's us that did not foresee an event or the possibility of an event like this to this severity.
Yes, I think we can kind of wrap this up. This whole situation that we have can kind of wrap it up by saying, if you're interested in crypto, if you're interested in the altcoin market, do not use leverage. Like, do not use leverage. If you use leverage on your position in the altcoin market, you have to be sure that you're okay with losing 100% of your capital. The way that I trade low cap altcoins is I go in with a amount that I'm ready to lose 100% of. So I go in into a low cap altcoin, and then when the value doubles, I sell half and I let the rest run. But the whole position is risked, and I don't use any stop losses. If I leverage that position, I better make sure that I'm okay with losing that whole position. It's not the same on Bitcoin, because Bitcoin is fairly safer than altcoins. But I think that's the lesson here. If you're going to be investing in crypto, you better invest only a very, very small amount of money in altcoins and be ready to lose it all, as you've seen, even with low leverage. People that were holding these altcoins in spot did not lose a single dollar.
Yeah.
Right.
I
Okay.
think
So
you got to treat it kind of like farmer stocks, right? Where either they're going to blow up or they're going to blow up, you know, right? Right? You go into the moon or you just go to zero, because of some drug trial that then looks really good. They get through stage 1, stage 2 trials fail, and then that's it.
yeah,
Yeah.
speaking of that,
Um,
I had a conversation with my fiance the other day. We talked about I don't know if we talked about like COVID vaccines or Ozempic or something like that. I mentioned, I think it was Ozempic, and I said like, it's not really thoroughly tested. We're probably going to know in like 5 to 10 years what the real results of those weight loss drugs really is. And she said something like, um, well, of course they're tested. I mean, they're created by these big companies. Of course they're tested. I'm like, do me a favor and Google the fines of the major pharmaceutical companies in the U.S. And she did, and she's like, wow, okay, this is bad. Like the major pharmaceutical companies in the U.S. Almost every single one of them had like hundreds of millions of dollars in fines for criminal charges. So it's like, yeah, it's a It's not used in crypto.
That reminds me of this advertisement I saw last weekend when I was scrolling through Instagram. They sometimes have like reels about advertisements from the 90s, or I think this one was from the 1950s. You have like a family snuggling on the couch under a blanket, and then the caption is, they are safe under the new cozy asbestos blanket in case the house catches fire.
Wow, that's
Wonderful.
insane. Yeah, no, it's crazy. But I think we want to move on here. So first of all, now that we have we got more people joining us, what we're doing here on these Monday morning sessions with me, Dirk, and LJ, we're going to create a session here where we are going to focus on something called fusion analysis, where we are bringing fundamental analysis, macro analysis together with price action on the chart. So we're trying to create a narrative of where we think the markets might go in terms of economics, and then see if we can find a pattern or the path of least resistance on the chart, basically combining FA and TA. And on that note, I would like to ask you guys, what effects does what we saw with Trump now in the tariffs, does this affect the underlying economic and global situation that we've seen for the last few months, or is this changing anything fundamentally for where we are headed in the like, for example, right now we have a risk on environment where the AI boom is very much driving the US stocks higher. We have gold obviously on a insane rally. Is this changing anything, or is it just back to normal now?
I think it's pretty much back to normal. I think where it would get worse is if China starts to get sick of this and starts pressing back more, just like with the rare earth stuff, and they actually start imposing things on the US. And then if Trump doesn't really have a proper way to deal with it and starts just like throwing stuff at the wall to, right? And then it confuses everyone and the whole market. Then it could start to get weird. Then the other portion is there was, let me look it up. I screenshot it before. Because we had Dutch government overtake Nexperia as well, which is a Chinese chip maker over there, Chinese owned, but it's on, in Netherlands-based semiconductors. And they just took full control over it because they want to make sure that they have enough semiconductors. So if, other countries start stacking in against China like that, China might start feeling like they're getting full walled off now by Europe and everything else. And then potentially you could get them doing their own trade war, not just responding, but actually instigating things. And then I think that's when it get really confusing. Because now you're starting to bring in players like Europe, like the UK, everyone else, and you've got stuff firing from all sides, not just sort of Trump does a thing, everyone else responds, which is sort of one-dimensional to a degree and easier to pull apart. If everyone starts firing their own bits, now it's a bit of a mess, right?
So you had a Dutch company. It was a Dutch company, yeah?
Chinese company based in the Netherlands. So
right,
Nexperia.
okay.
I was just about to
Yes,
say, I didn't know that the Dutch had a semiconductor company. That would have really surprised me.
Yeah,
I've never
they
heard
do
that.
now because the government's overtaken it, but it was Chinese.
So the Dutch government overtook the Chinese company, you know?
Inside
Yeah.
the Netherlands.
Yeah.
Oh,
yeah.
wow.
So they've just full taken control.
Oh, wow.
But what if but it's a Chinese company, so it can, because if that was in China, that it wouldn't happen, and then obviously.
No. Yeah.
But it's a Chinese company in the Netherlands, so can't
So
they just pack up all their stuff and go to China and build it up in China?
Yeah, and so it's becoming more of it's sort of similar to the whole Russia thing, where Russia got blackballed, right, and all other Russian assets were just taken, and then Russia took all foreign assets within Russia, so they just rebranded McDonald's and rebranded everything else,
But it's one thing doing that with Russia, right? I mean, with a war in the background waging on and threatening all of Europe, as a matter of fact. Now, it's another thing of doing that with China, which,
Yeah.
in my opinion, is like multiples more dangerous.
Yeah.
And what I hear, like this
That's
news,
when you get extreme protectionism, right?
that is
Where every
extreme
country really does
protectionism.
go.
And I don't know if Europe, and not just the Netherlands, for sure not, but Europe as a whole is in a position to really put economic pressure onto China, honestly speaking, because we are so dependent on a lot of the exports that come from there, no? And they are not very dependent on the exports or the imports coming from Europe to their country anymore. That's really
that's where Trump's game comes from. That the only way he can do what he's doing is if he corrals all the other countries together. Because if China cuts off the US, they're going to still have to sell this stuff somewhere. But then if they get cut off by everyone, now China is actually fully choked out.
Yeah.
Right. And so it only works if Europe's on the US side, Korea's on the US side, Japan's on the US side, UK's on the US side. You know, who else are they going to sell to? They don't have anyone to really sell to with, you know, the backing.
And this is AI.
Dollars
This is
from the consumer.
So this is basically the race to AGI, right? It's about governments making sure that so the Western countries making sure that the not Western countries are getting to AGI first, because the authorities or the governments around the world have now understood that the ones that gain AGI first kind of gets all the power in terms of technology. So they want to make sure that they are the first. I mean, everyone is viewing themselves as the good guys. So you want to make sure that AGI is built by the good guys. Now, if you're the Chinese government, you are the good guys, and if you're the U.S. government, you're also the good guys. So you want to make sure that you are the one building AGI, because you don't want the bad guys to have AGI, because the ones that gets to AGI first gets supremacy across any field that has any connections to any type of technology. So the US and Europe is probably going to make sure that they are the ones that gets the AGI first. And here we see the Dutch government taking control of Nexperia, because they believe they need to be all hands on to make sure that they are the first to AGI. So this is interesting. It's all about I view this as, unfortunately, I hope I'm wrong, but this is a race to the bottom, right? It's just, it doesn't matter who creates AGI. When AGI is created, we're all in bad problems. You know?
It looks exactly like this playbook from this paper AI 2027 that I think, Jonatan, you and me, we discussed about this like a while ago, a couple of months ago also, where it basically says until 2027, we will have in the United States and in China like a general AI that will basically take over the negotiations between both countries from the politicians. So you have like this black box AGI negotiating with each other, where you don't really know, like, are they going to decide for the benefit of humanity, or is there a hidden agenda again, that leads eventually to the destruction of humanity?
I don't think it's going to replace politicians, but I do think it might be replacing economists. It might actually, the first thing that might be replaced is central bank policies. We might not have actual people deciding on what the interest rate is going to be. We might actually have AGI deciding on the interest rate because of all the numbers and the best possible outcome for that. So I think that will be like the first overtaking of AGI, and then everyone's just going to realize that it's just much better to have AGI, and then it's going to take over everything, and then it's going to be a big catastrophe. But it doesn't matter. We're going to have we have a few years left to make some money here in trading. So it's all good. It's all good. We're not not being overly pessimistic here. Go to the 5ers, get an account, get some nice payouts, and enjoy your life. So okay, so that's just one big conversation in of itself, and I can't really help to get philosophical when we talk about the future of AI, because basically what we're talking about is what is intelligence, and then what happens if we define intelligence, and then we realize that, yeah, okay, the AI type of the intelligence might actually be 1,000 times smarter than what we define as human intelligence. And at that point, we can talk about a resilient US economy and Goldilocks conditions as much as we want. It's not really going to matter much long term. But speaking of a resilient US economy, I got some notes here I'm looking at, and right now I'm looking at two main conditions that is driving the overall theme of the market, and that is the resilient US economy. And we're looking at this as being a Goldilocks conditions where the economy is strong and inflation is not too high to cause too much problems, and this is conducive of a risk on environment. But there are, of course, also some concerns here about inflation not going down as quickly as possible. And what happens if inflation stays where it is and starts going higher? Are we going to see the Fed backtracking on their idea of decreasing the interest rates, or are we going to see the Fed perhaps saying, looking, and we talked about this, LJ, about potentially the Fed raising their inflation target to 3% instead of 2%, and what that could potentially mean for the market in the next 1 or 2 years. Because if the Fed raises their interest rate target to 3%, that means that inflation is no longer very high.
Yeah.
And that leaves more room for quantitative easing and more room for error in this Goldilocks conditions.
And maybe they even have to do that. I mean, look at the trends we are seeing US dollar wise right now. Worldwide, we see like a movement potentially going a little bit away from the US dollar, at least as a risk off basis currency. And you could make the US dollar, at least short term, I don't know about the long term effects of something like this, more attractive, because it allows you with this new threshold to lower interest rate potentially to somewhere around 0.25, 0.5%, thus having flows into the US dollar again, or into risk, US dollar based risk on assets, to be more precise. Of course, it's not going to attract money into treasuries very much.
I think it will, actually.
You think? Yeah, okay, maybe
Yeah.
if you don't have a good alternative, or the, let's say, alternatives that have the same credit ratings are also somewhere around that interest rate environment. Of course, then you probably would still prefer to buy like a fixed income asset based in US dollar. But if you have like a different scenario where, for example, in the Eurozone, you have a higher interest rate environment, we wouldn't see money flowing into the Eurozone because the Eurozone is out of the AI race. Yeah, it's not going to happen anymore.
Yeah.
Once again, in Europe, we are the best in regulating.
Yeah. Eurozone's out. At the moment, like dollar's been expensive. So yeah, buying treasury is not favorable, especially when you're seeing that rates are going to go down. Market's very hot. There's a chance of, QE coming back again eventually when stuff blows up. Things are going to get debased, hence the whole debasement trade as far as gold, and that's now popped out everywhere in the past 2 weeks as the new name for it. That's also part of the reason why gold won't be coming down too far, because majority purchasers and buyers and holders are central banks and governments.
Yeah.
And they're buying it to buy it and just sit on it and accumulate more whenever it's cheaper. They're not here to sell it. And then it's almost like returning to somewhat of a gold standard in a way, where you have that backing. Eventually, the dollar and stuff comes down cheap enough that it does make sense to refill the coffers of your current account balance with US treasuries and everything. And that seems to be the thing that the Trump government is looking for ultimately: devalue the currency, bring rates down. As you do that, inflation is going to run a little bit hotter, but it's kind of just sticky and stuck there. So you kind of just ignore that. Having rates down lower hopefully accelerates growth. And even though inflation's a little bit hotter, rates are actually lower than inflation, but you've got so much growth coming out that offsets it. And
Yeah,
so
I mean,
the growth aspect. then eventually with that, stuff crashes or something like that, dollar gets super cheap. All the other countries now, it makes sense for them to buy up the US dollar and their treasuries, which allows them to go into the next phase of debt funding whilst continuing to secure the dollar as the reserve currency, and you end up with more net dollars in total circulation than you did before. And that seems to be a lot better than everyone's total.
Jump in.
It's the old game of trying to print yourself out of debt, no? You want to maintain inflation somewhat manageable. You want to have a low interest environment. You want to have a lot of growth, GDP growth, obviously higher than inflation, so you can slowly print yourself out of your national debt. Never worked before, by the way.
Not really. I don't think they're trying to get out of debt. I think the debt is certain. They're trying to have a growth rate that outpaces the debt. That's all that matters. The debt is going up permanently, infinitely to whenever. What they need to keep control of is that it's the reserve currency. It is the main transacted currency, no matter what. It is respected. And that's basically how they keep that game going.
When I say printing out of debt, I mean, of course, debt to GDP ratio. I mean, it's a difference if you are sitting at 130% there, or if you're sitting at 90% or 80%. And I think this is like the plan where they would like to go again to like 90% or 80%, because that's like the baseline we've seen for decades, actually, until the money.
But the way you can get out of that is by having the rates lower. Means they pay less interest on the debt, because all that really matters is the interest on the debt. Then if you're growing GDP enough, you start to get that terminal velocity away from the debt to GDP ratio. Yeah. Then it pulls everything back. Other people layer up on the dollar now that's cheap via treasuries. That keeps it as the circulating reserve currency. And now you can repeat the game again. And then
that's a great theory. It didn't really work out in the past. I don't know any example where that worked out long term, honestly speaking.
So before we continue, I really love listening to you guys about this, but we have to make sure that we understand that the viewers might not have any idea of what we're talking about right here, because this is quite advanced stuff.
That's okay. Half of the time I don't know what I'm talking about too. So.
Let's assume we do know what we're talking about, and the viewers are not really sure what we are talking about. So if I put myself in the role of a viewer here that is completely new to fundamental analysis, I would probably first ask the question, you're talking about U.S. Treasuries. So what is U.S. Treasuries? Why would an investor be interested in buying U.S. Treasuries? And why would they not be interested in buying here at these levels, at these prices, in these conditions? And what type of conditions would be more interested to start looking at buying U.S. Treasuries?
Sure. So why you want to buy it is because it's still considered like tier one capital. So the top tier of capital that you can get outside of, if we now want to call gold, it's kind of in its own sector of all-time quality. The next best liquid transactional piece is going to be US Treasuries, right? And then hence the dollar component with that. Why you wouldn't want to buy it now is because the dollar is very expensive. So you got to obviously exchange your currency for that. And so if you're buying it up here, you're basically just getting less bang for your buck when it's expensive. So if you can buy the A-tier asset cheap, that's good. So imagine you could get a discount on Apple or Nvidia or any of these top-tier stocks. You'd be like, oh, awesome, right? So they come down to a certain point, and then people pile back in because it's top tier and that's where we're going, right? So hence the US Treasury thing, so long as it is still that the US is where we are going and is staying number one, that's where people will come back to. And circling back to what I just got over saying, I think that's why the US is doing it, because we know that the AGI thing is the ultimate play. Whoever wins that gets such a distinct, because right now the entire global economy, economics in general, markets, all that kind of stuff, it's based on competition, right? You have enough competition, it makes it good, everyone competes, stuff goes up. If you win AGI, there's no competitive rung anymore. Whoever gets there scales everything else from science to technology to everything, health, systems, all this. so massively that no one else, even once they get there, could quite catch up. They'll just fly away in an exponent curve. So I think that's why the US right now is doing that, because they have to run that way, because what other real option is there other than to keep the thing going, hope that they win that game ahead of China. So yeah, that's it in most basic summary, I guess.
Just to come back to the U.S. Treasuries, now you're saying that now the dollar is relatively expensive, and therefore U.S. Treasuries are not as interesting. Now, does the value of the dollar affect the interest rates on the treasuries, or does it just affect the actual cost of investing in the treasury? For those of you who don't know what treasuries is, basically it's the let me see if I get this correctly now, and please make sure that if you are correct me if I'm wrong in the comments, guys. But it's a way for the U.S. government to fund, let's use public things, right? So you can invest in U.S. treasuries, and the government promise a specific interest on that investments, and it's secured by the whole U.S. government. So it's considered very safe because the U.S. government is most likely not going to go bankrupt tomorrow. So it's a very, very safe asset. It's supposed to be the safest investment, and I think it's also used in calculations as the risk-free investment, right? I believe.
Risk-free rate.
So that's what it is. But the interest that you're getting on the treasuries has to be worth the investment. So how does the value of the dollar affect the value of the treasuries?
So they're slightly independent in that the interest rate is going to depend on the country, the fiscal outlook for the country, growth prospects for the country, its total, because you have the government side of it, but you also have everything under the government in that country. So that's, every single company, taxpayer, all that kind of stuff. What potential capital value do they hold? Say in the event something does go bad, they can tax their citizens or something like that to pay off any debt if they do need to print further money, etc. So that's kind of the strength of the economy as a whole, and that's why we watch all the data releases and that kind of stuff. That's why they're important. As far as the value of the currency itself, you do have to think about how much you're paying for something and then what percent return you're getting. So if you're getting X percent return, but then you forward forecast that the dollar value will go down, you've then reduced the interest rate in terms of the total return that you're getting for that asset down as well. So the same way, if you bought, European stocks here, and then the euro, so you exchange your US dollars for European stocks, then the dollar went up or it went down, you're either going to get a net positive or net negative outcome, right? So this is where you get the currency exchange risk element to it. So if European stocks go up 5%, but then your currency differential went down 5%, technically you've made no money, even though the stocks did go up 5%.
Exactly. Yeah. Exactly. One thing maybe I would like to add here is not only as an institutional investors, actually, I think everybody out there who's thinking about building up a portfolio in risk off or risk on assets, not so much when we talk about scalping or day trading, of course, should think about that. But you can look, for example, I have here this is the yield, so the net profit return on investment, so to say, you make at the moment on a US Treasury 10-year bill. What does that mean? You give your money to the US government for 10 years, and in return for this, you get an interest rate payment every year. So this interest rate payment is at the moment at 4.059%. So let's say 4.06%. Now you have to make the decision. this is considered, like AJ just said, the top tier asset you can invest in. So this should be pretty safe. Why is it safe? Because it's backed by all the tax income of the United States of America, which still is the greatest, not the greatest maybe, but the biggest economy in the world, to my knowledge. No, I don't think China has overtaken them yet. So you have to make the decision now. Am I going to buy the safe asset and have, let's say, 4% per year? Or am I going into the risk on asset, which in this comparison, if we just want to keep it within the US dollar hemisphere, would be the US stock market. So the S&P 500, historically speaking, over the past, I think it's about 80 or 100 years, the statistic goes back, returns you on average 8% per year. Yeah, you have years where it goes down by 20%. You have years like this one where it goes up like by 15, 20, 25%. On average, you're going to balance out by at 8%. So you as an investor have to make the choice. Is this plus 4% I get from the risk on asset, the stock, worth the risk? Because from the US Treasury bill, I'm going to get my safe 4% per year. Is that better, or do I want to risk that my money gets less because maybe I invest at the top of a stock market by accident, but I have a chance on average to earn 8%? Now, what is interesting right now, in my opinion, is the environment that we are seeing on the very low term interest rate environment in the US still being quite attractive. So if you look at the 3 months yield for US treasuries, we are still at 3.86%. This is because we are just coming out of this inverted yield curve that we've been talking about a lot, which normally is a sign of a recession hitting. But as it seems, at least for the moment, there is no recession coming up, or this very minuscule recession we had in the first quarter in the US was about it. So my yield for just giving my money for 3 months to the US government would be at the moment at 3.86%. That's not very far from the 4%. It's annualized return. I'm not going to earn 3.86%, of course, for the month. And you can see, especially on the lower end, how this developed since, inflation got so much higher. The bottom of the yields of treasury bills that have a very maturity that's going to be soon, like in 3 months, has sprung up from basically zero, because remember, we had the zero interest rate environment always almost in the US, 0.25, I think it was, at the lowest, and it's sprung up all the way during COVID from zero basically to 5.5%. And interestingly, a lot of smart, or at least I consider them smart investors out there, took this opportunity when we were above 5%, Warren Buffett, for example, being one of them, and said, I'm going to rotate out of stocks now and into short-term US Treasury bills, because I got like 5% up to 6% at one point in secure yield, in secure return on investment that I'm earning in comparison to the 8% where I need to risk something. This is, for example, the reason why Warren Buffett decided, I think he started like 2 years ago, if I'm not mistaken, or 3 years ago, to slowly rotate out of US stocks into short-term treasuries. Now, if that was a smart move, maybe not, because we saw what the stock market would do. But I think it highlights kind of the chain of thought and decision making that we see on a more institutional level. This is why it's important to keep an eye on the treasury market as well. By the way, this treasury market is multi times bigger in terms of volume than anything we are seeing on the stock markets, not to mention cryptocurrency markets. That's why it's so important.
Okay, so let's first cover the. So this is the 3-month treasury for the US. Now, what happens if, because you obviously can't trade this chart, but you get locked in, right? So if you buy this at
so you
5% interest, when do you get the money?
You would buy this at this rate, for example, right now, 99.285%. So slightly under 5%. Slightly under 100%. That means, like, if you want to invest $100,000, you would only pay for, at the moment, for that $99,285,000. And from this, this one here, the yield, so to say, is calculated then. That means probably that the actual interest rate for this is somewhere at 3.75% or 3.7%. But since you can buy it under 100% at the moment, your actual yield, your return on investment is higher because your interest rate is paid on 100% and not on the 99.285%.
Okay, so how long are you locked on that interest rates? Are you, because this is a 3 month, are you locked on only for 3 months, or how long can you?
In this case, 3 months, because that's the maturity in 3 months, or this is the average of treasury bonds that are going to mature in 3 months. Then you
So
get
if I buy this today, I'm going to make in 3 months, I'm able to take out the, let's say, 3.5%, but calculated on a yearly.
Yeah, so you have to divide it basically by 4 then.
By 4, yeah.
Right, okay. Yeah, that makes sense. Right, so that's treasuries. That's a quick little crash course in treasuries, and what it's very important to know because obviously big portfolios, they rebalance in and out of treasuries. When you go into a risk-off environment, you're not going to be like Warren Buffett, for example. He's not going to be holding stocks in the S&P 500 forever. He's going to be rebalancing in and out of stocks based on the overall conditions. People like Ray Dalio. Now, okay, maybe take another example. Let's take another example. Who do we have? Howard Marks. No, not Howard Marks. Is it Howard Marks? No, who is it? Is it Howard Marks? Is it
What are we talking about?
like cycle investors? That's Howard Marks, isn't it? Yeah, okay. So Howard Marks, he's I think he's the co-founder of Oaktree. Okay, so Oaktree Capital, they're not going to be holding the S&P 500 forever, right? They're going to be following the cycles of the market. So when you're in the risk-on environment, they're going to go into risk assets like the S&P 500, and then if they see signs of the global economics shifting, and you go into risk-off environment, they're most likely going to go into assets like the U.S. Treasury market, go into cash basically. So that's very important to know, and for those of you who are looking to build a long-term portfolio, that's something that you need to know as well. But looking at the overall conditions right now, we've also talked about how the dollar is expensive. But then if we switch to my chart right here, how far, like where does the dollar have to drop to? Because I view the dollar as being at potentially support here. I am looking at a potential technical breakout for this to be long-term support. But where do we need to see the dollar on this chart for it to be considered cheap? If it's not cheap here, then where is it cheap?
And that's the one thing that spoils my party when it comes to my long-term analysis. I love this chart.
Yeah, because
really.
I know that LJ is looking at a different channel. LJ is looking at this channel, which is very different from mine. And if you look at this channel, then the dollar is more expensive than what it has been in the past, and it's above the so-called mean.
Yeah.
So are we looking at this channel or are we looking at my channel?
Depends on the time horizon, no?
Okay, well, let's say next 5 years then.
And there's nuances within in that entire spread, right? Because these days it's a little bit different since we have all the central bank tools like QE and everything. So that very much changes the nature of how bonds move, capital in general, the amount of actual currency in circulation. So say that lower band, basically breaking out of this channel that you have, your channel, somewhere through there would be where you're starting to consider things cheap or cheap enough that you would get proper rotations.
And
the
what
other
we
portion,
mean then is, yeah, sorry, I thought you was done. Continue.
No, go on. You go
Okay,
first.
so you're talking about when the dollar breaks below this area, gets out of my channel, maybe comes down to the middle point of this overall range right here. At this point, we might consider the US dollar being cheap. And a lot of times, of course, we see that the US dollar is printing a bottom when that rotation is happening. You come risk on environment, the S&P, the stock market goes up, everyone's making money, everyone's happy, the dollar keeps going down, creates a bottom. People like Warren Buffett is rebalancing and recycling the profits from the stock market into the US dollar and the treasury market, and that builds demand for the US dollar, and the US dollar then creates a bottom, and the risk run and the bull market is over because there's no more buyers, and the buyers, the smart money that has already bought, they are now selling and going into cash. That's the overall cycle dynamic we're talking about, right?
Yeah.
So the
Yeah.
question is,
Yeah. Sorry. Go.
the big question here is, and I think if you can answer this one, then you'll answer everything. When is that? Like, when is that happening on the chart? And I think that's, of course, the $1 billion question.
Yeah, definitely. So the thing in macro in general is if you can get the dollar right, you get everything right. Right. So the dollar is always the hardest piece with that because you can see the clear direction. It's everything else that happens in between. And this is where you get the stochastic sort of flows, and you can view that as the up down up down up down. That's basically the moves in between 2 points, right? So a crow's flying from this point to the other point, but maybe he goes and visits like I don't know McDonald's, then he travels over to Hungry Jack's, then he goes sees his other bird friend in another tree, then he hangs out there for a bit, then he goes back to McDonald's, and then eventually he gets to the point. So what you're trying to guess is all the chop in between about where this bird might fly before he actually gets to his destination. And
Could
so
it be as simple as just the dollar going to 42?
yeah, so what I'm sort of looking at is I think the yen needs to appreciate a bit more right now. Dollar yen getting ran right up. It's not out of possibility that you could see it running towards 160 again. If that happened, I think Japanese central bank commented last week, the more bits and pieces out. Like if that starts happening again, they will actually properly intervene this time. They tried a few times when it was running up towards those highs, to some success and some lesser. But I would see some kind of rotation with that. Euro dollar probably needs to come up towards that 120, somewhere in the low 120s. I see it very hard given Europe's condition right now to see the euro being valued more than that. But I think once you get to those points, you could see the majors as being somewhat relatively, strong, relatively bought compared to the US dollar. Right now, emerging market currencies are very strong against the dollar. There's massive dollar selling. On the majors, we haven't seen that huge dollar selling yet. They're kind of still a bit neutral. So I think that needs to flush out first, and then you get a rotation. And if you price that out, that is roughly right there where you're highlighting. In terms of if you take the approximate calculations from the Dixie as the percentages of what euro dollar, pound dollar, dollar yen make up, reverse calculate that into an approximate value for the Dixie, that's roughly where you land.
That's very interesting. So what's interesting about this is, the saying, maybe it's not a saying, but I know that both you and Dirk, you've probably seen the same pattern within the market. So if you look at a range, for example, when a lot of times we can go through the market, we can do a market scan, and we can say like, oh, look at this range. This is a perfectly defined range, or this is a perfectly defined channel. Now, the key to channel or range trading, in my opinion, is to identify the range early, so that you can actually trade within the range. because as you probably know, when the range is obvious and when the channel is obvious, a lot of times that's the end of the range. That's when it's time to break that range. Now, if you're looking at this channel for the USD has been going on for since the financial crisis in 2008, and this channel has actually brought us up to the top of this bigger channel. So just applying a very simplistic way of looking at it, this channel is quite obvious at this point, and I would not be surprised to see this channel breaking at this point. So go ahead, Dirk.
I think that's very interesting. I've just while you guys were talking, also looked at the chart. We were right now, by the way, on the monthly chart, trading almost exactly at the 100 months moving average. This kind of interesting as a zone of major long-term support, maybe for the US dollar, if you want to entertain that, of course. But I really like, and correct me if I'm wrong, this kind of like the channel you were showing just now, no? Like on the monthly
Yeah,
chart.
that's the one.
Yeah. Like just roughly, you know, like this. And of course, I'm asking myself, like, if I look at this, I always want to look at the most obvious outcome. The most obvious outcome, taking now not into consideration short-term volatility. If we look at the monthly chart, short-term volatility means like what happens the next 3, 6, 8 months, you know, or even the next year. Could be an outlier, of course. And we're talking about very, very long decades of projection here, of course. But it seems like, and like the US dollar is still in this uptrend, really. I mean, it's an uptrend that would mean that the US dollar is going to gain in value. How can the US dollar, in this environment right now that we are seeing with all the distrust about Trump, about the US dollar as the major currency, gain in value? I think the answer to that really might be AI once again, that somehow the US is going to stay ahead of its competitors when it comes to developing AI technology further, thus attracting more investments into the US dollar because everybody wants a part of this. Maybe this is on a very shallow kind of chart technical level, what we are seeing playing out over the next 10, 15, 20 years. I'm right now, of course, making a lot of assumptions here, no?
Yeah, I feel like
Yeah,
I need to be very careful in this conversation because I am technically my idea is to see the US dollar strengthening from a technical point of view. I don't really see that fundamentally. I know LJ, you wrote a couple of days ago about you not being as sure on dollar weakness and there might actually be dollar strength. Now, I am in like I'm very well aware of the confirmation bias, right? And I have a very very strong confirmation bias and I'm very aware of it. I'm actively looking for reasons for this to be the dollar bottom. So what I've tried to shift now is to actively look for reasons for this not to be the dollar bottom. And from a technical point of view, I can see the break of the channel, but it has not broken yet. So I can't really. We are in the channel, and that's what I have to focus on. From a fundamental point of view, um, the US dollar not being as attractive, that's obviously a strong reason for the dollar not to bounce. But I would love to hear your reasoning for this to perhaps not be for this to perhaps be the bottom for the dollar.
Yeah, so I can definitely see that. So in order for it to be like full, you get the full play out like we highlighted before, is where the majors all rally against the US dollar. So that's the euro going up, the pound going up, dollar yen coming back off. We've had a number of attempts at that now. We've had all the reasons to do so, and we're not really quite getting there. Now, emerging markets have strengthened massively against the dollar. Dollar's sold off there. It's generally more important for the emerging markets to pile into those treasuries at those levels to strengthen their own current account balances, and especially in amongst the tariff, China, Trump chaos, it would make sense for them to start loading up so that, regardless, even if, it gets into a spat, the US is still going to be the best in the bucket, right? The cleanest of all the dirty shirts. So it's still a dirty shirt, but it's the cleanest dirty shirt. Put it that way. So that's where that price stuff we were talking about comes in, which could start to boost the dollar. The other thing with Trump, what he's doing, it seems to be working out, and I can definitely see, the US going from strength to strength. The numbers start to improve. The job market stabilizes, holds well. People go, okay, this is pretty good. Employment's still ticking along. You could even see an uptick in employment from here, as much as everyone's looking for it to come further off. There's certain bits of data through there. It will probably have some wobbles in between. And this is where we talk about that stochastic, where does it go between ultimately getting there. But you're seeing stuff with hiring and that sort of thing, people stacking on extra hours and temporary workers and trying to juice that out before they hire new people. And normally that's right before the cusp of they commit to actually hiring the people. Obviously, that's very expensive. Now you've got, healthcare, insurance, proper wages, all that kind of thing. So that is a signal that they are wanting to do it. They're just waiting for enough confidence to be able to do that. Now, if the US economy does start to stabilize, Trump doesn't actually kick off with these tariffs. They do continue to just be, hot-headed remarks. This all settles down just like it was looking like we were the week before last Friday. Then you could see, the US going strength to strength. NASDAQ runs off. Everything runs off. Very hot economy. People pile back into the US. And that's where you see that coming from. The other piece I would say that has stalled part of the dollar selling, this is the US Treasury General Account, right? So the US Treasury General Account, they have started filling up those coffers massively. So that has stopped a lot of the dollar selling.
Wait, before we go on, can you just explain what we're looking at? What is the U.S. Treasury General Account balance? What we're looking at here?
So this is basically their general account balance of how much money they have on hand, essentially, with what they need to, pump out to facilitate just all their payments in general. So whether that's the government employees, general welfare, debts, everything, right? How much money do they have in the coffers sitting there ready and waiting? So we had a bit of spending come out. We also saw that come in with the US dollar coming off. We saw a bit of strength in the US dollar with this coming off, because basically they're reducing the total number of dollars in circulation every time this goes up, and they're increasing the total number of dollar supply when it goes down. Okay? So we've seen this come up massively. So I think this number here is almost now, this is in millions times by US dollar millions, like 500 billion there, $500 billion. So they could unload that into the economy, right? That would bring the US dollar down. So that would not be good for that. At the same time, you've got Trump's tax bills and everything, which should stimulate the economy, because everyone's going to get the tax cuts. He wants to give everyone like $500 to $2,000 of stimulus as well. And there's also been some other stuff with the banking regulations, which should unlock like another 200 billion odd of capital available for lending from the bank side, which that was equivalent to, if you do the equivalence of how much that was compared to what was being pumped out in QE measures during COVID, it's like 1/5 or something of peak QE during COVID. So that, add all of this liquidity together, you're coming up towards almost $1 trillion of excess liquidity that is ready to be fired off. And it seems as though that is the raw firepower that they're holding on to. If Trump's stuff doesn't go fully well, that they've got this backup that they can dump that in and keep everything churning. And this is where you're going to get that back and forth of the dollar on that back foot there. So how you determine which way that goes is very hard, because it's going to depend on how well Trump's tactics are working or not working, and they're going to keep playing ping pong just like we've sort of seen.
So the chart we're looking at right here, that's basically the U.S. government accumulating the dollar to potentially spend, right?
Yeah.
And when the government spending goes up, this chart should go down because if they're going to be spending their U.S. dollar, they're going to be owning less treasuries, right?
Essentially, yeah. To
Yeah.
keep this all very simple, yes.
Yeah. Okay. So we've discussed as well previously the idea of you have two options. You can have either you can print money or you can grow the economy, or you can print money or you can I guess it's called fiscal spending, right? Where governments are spending money to pump up the economy instead of printing money.
Yeah.
And,
So
and, and,
yeah.
and
So if you issue debt, which is thus via the bond market, the government gets money through issuing debt or from taxes, essentially. Right now, if you issue debt to grow the economy, so you increase GDP, that is good. If you issue debt to spend it on silly stuff, then you've just increased your debt profile with no increase in productivity. Very bad. The only way you get out of that is by taxing people more. Obviously, if you tax people more, less money in the uh, circulation of the economy, which depresses the economy, and then you get into a bad downward spiral.
Deficit spending, I think it's called in English, no? Like not the second part,
Yeah.
the first part you mentioned.
Yeah.
all right,
John's
this is good. No, I mean this is great. Asking these questions and going through all these examples, it's very educational for for myself as well, and I'm hoping that the audience are liking this as well. So if you do like these, I guess you could call it like a crash course in fundamental analysis using the current structure and the current economic environment that we have. Make sure you hit that like and subscribe for more content like this. I had a question, but I'm not really sure. I can't really remember
In
what that
total
question.
summary for US dollar direction, it's going to depend on how Trump's tactics play out. What makes it hard is that whilst Trump is deploying all these tactics, whether you call it him or the other people, Scott Bess and all the other people he has behind him, are building up sort of hedges to every tactic he does. So when he moves one way, they've got something to deal with it. And then they can move back and forth and back and forth. So it's not just a clear cut, if he does this, we're going to end up here, because they've got something else to quell that, bring it back. And this is why we've had this kind of market and a lot of the uncertainty. And some people saying market's going to all-time highs, other people saying, no, we're going to crash, it's all over. And you're seeing this very large split dichotomy. There's very little in the middle, right? For those reasons. And this then depends, tends to come down to people's bias on, say, opinions on Trump, opinions on the tactics, and whether or not how much they're actually looking at these other tangential pieces and taking note of them in consideration of their own idea of what's going on.
Okay, so if we assume that the government is going all in on deficit spending or fiscal spending, whatever it's called, we can assume that the dollar is going to reduce in value. It's going to go lower, right?
Yes, particularly if it's reckless spending, right? And the market doesn't believe this is going to produce economic activity or robust activity.
But short term, I mean, there's also like a limited effect to a sense of what the government can do in terms of overall economic growth. It's one of the actors, of course. It's a large actor in the whole slate of the economy when it comes to spending and investing, of course. But it's not the only not the only actor. Like the private sector, for example, is much larger. Otherwise, we would basically have like communism, like central planning again. No?
Yeah, and I think the other thing is where people are talking about the government being in debt and having debt problem. Companies don't. The US company structure has one of the best debt profiles it's ever had. And so this is where you get, again, going back to that trying to figure which way is it, because there's these countervailing things the whole way. And I also see that as explaining the yield curve inversion right now, where people just out the longer term, it's not because people are necessarily seeing it bad, they just don't really know how to price it. How can you at all price it appropriately? So if you just can't price it appropriately, the best option is to say it's probably more risky than not. You're not going to play on the opposite side that it's all going to be great and rosy. And so hence you're seeing the majority of the activity in the bond market's all very short term. A lot of funds that were doing a bit more, middle of the yield, sort of 5 to 10, have all gone to sub 5, and really ignoring that long end, because it is so difficult right now to truly get a finger on it.
By the way, what is interesting is also when you have like a high reserve in the Treasury General account, essentially this drains reserves from the banking system in a country. And it means then also that banks on a small scale tend to be more picky when it comes to lending money to individuals and companies. Because obviously, if they have less reserves, they cannot lend as much money out to, so they become more picky in whom they choose to give a credit to. But it's like, I don't want to overinflate this, because it's really normally a very short-term effect you see, just as an anecdote, so to say.
So I want to go back to, I've seen that some, well, maybe you want to continue there on where Dirk left off.
No, I was going to say, that's exactly it. And then I was just trying to remember the name of, I forget it now, the Banking Act that they're putting through to unlock the excess capital. And then, yes, the Treasury General account, taking that liquidity away. These are kind of just all like backup ammo reserves that if we need to deploy, we can just go ham. And so I think that's going to be the first initial attempt as well, before any kind of QE, that you just juice it up that way. And then if that fails, you go to slamming rates to the ground, go to QE, go to the traditional.
Absolutely no. I mean, QE always has to be your last measure, or the last weapon in your holster, because after that you basically cannot do anything anymore as a government or a government-related body.
And it's only really worked because we had every single other country also doing QE at the same time. So like the UK, Europe, if it was just one idiosyncratic country, then you get smashed, like Japan did, obviously.
I want to ask, we get a question here that says, LJ, where do you learn all of this? I also want to learn fundamentals and all this. So I can, first I can answer how I am learning currently, because I'm in the journey, and I've been so for the last few months or so, to try to figure out like, how can I learn more about fundamentals to incorporate this into my technical analysis. And you're seeing it right here. Basically, we have LJ with all the knowledge, and I'm asking him as many questions as I can to learn. But also something that I found very helpful is, you get a lot of free macro newsletters out there that doesn't necessarily have to have like a great track record or anything like that, but you want to go to news websites like, for example, Bloomberg, maybe follow a couple of analysts out there and make sure that you understand what they're talking about. And if there's something you don't really understand, research the specific aspects of what they're talking about and make sure you understand what all the words mean and what the implications for the market mean. It's someone who's gone through the whole journey of learning technical analysis and now doing fundamental analysis. I must say that it's very, very, very different. Technical analysis is visual. It's about numbers and being visual. Fundamental analysis is much, much different, where you have to research in a much different way, and it's much more advanced, in my opinion. But I would say more rewarding. I really do feel like when you have an overview of the global economics, and you can kind of try to paint or create a story of where you think the risk sentiment is going based on this and that. It's actually very, very rewarding. But LJ, how how did you learn? Like, where do you get all this information? Because I ask you a question, and then like I can ask you a question on whatever based on fundamentals, and just you just have it there. Like it's like your book when it comes to this.
Yeah, I don't know. I've just sort of picked up all this stuff over time. I would say just by being generally curious, I guess. That's sort of just the nature of the person I am, for one. I haven't had any sort of formal training per se, or anything like that. I just read stuff. I keep up with things. To me, it's all very sensible, logical. For whatever reason, I just sort of get it in a way. So when I do read and pick up these things, it all just pieces together. Um, where you can find stuff is, I mean, just keeping up in general with central bank news. You've got outlets like Bloomberg. There's a lot of other macro. Um, Hedge funds often put out various pieces. They're not going to give you everything, but you can start sort of reading up a lot of these research reports or that kind of stuff, or even from banks as well, Goldman, JP Morgan. You can find that stuff all over. Up to date stuff as well will be very hard, but particularly you can also go back, and it's interesting to look at things from like 2010, 2011, 2012, 2008, right during the GFC, that kind of stuff. See how they piece it all together. Start learning, trying to read it, and there'll be a bunch of jargon in these kinds of things. Just like if you start picking up like a science journal or something and reading studies, there's going to be a lot of scientific jargon, but you'll start to pick that stuff up. If there's a word you don't understand, Google it. You start defining each phrase and how all the interconnected pieces come together. And I guess just gradually you build that sort of spiderweb framework in the back of your mind. And then the more pieces you do build, you've kind of accumulated that, and they just keep building on top of each other. I wish I had like a better, perfect way to say, here, go here, do this, do that. But yeah,
Well,
I don't
I
know.
do
That
actually
hasn't
have
been
a.
my journey.
So I can tell you guys about my structure that I have in learning. So I'm subscribed to a few like a few analysts. So the first one I'm subscribed to is 42 Macro. Not sure if I should advertise that here, but so I do follow like let's say like an investment macro analysis community. So I am subscribed to their like monthly reports. I get a monthly report every month, and I go through it very extensive. And I go through it, and I have a pen and paper, right? I get a pen and paper, and I take notes on all the things that I need to research more. So if there's anything that I don't understand, I make notes on that, and then I use ChatGPT and Claude to find sources. And you got to be very careful with using AI when you're studying for something, because they're going to be wrong all the time. Like I'm all the
Oh yeah,
time. Like I studied for CMT. So let's
be
just
very careful.
maybe yeah, maybe a little bit off topic, but I studied for CMT1 using ChatGPT, and I spent probably 2 months using the information from ChatGPT. And my God, everything was wrong. Everything was wrong. So I spent 2 months of wasting my time using AI in my education. But what you can use AI for is to look up information and look up sources. You can ask ChatGPT, for example, like, what is this? And then provide me the source to that. So I follow those, and I get a monthly report. And then I actually do use you, LJ, a lot. I ask you questions on things that I don't understand, and you're very helpful with explaining some of these things. And then I have people I follow on Twitter. I get notifications on a lot of good analysts that I follow on there. And I Bloomberg. I read a lot on Bloomberg. I have a subscription to Bloomberg, and I have a really good newsletter that I'm subscribed to through Bloomberg. Uh, it's like market risk or the everything risk. I think it's called the everything risk or something like that. Sent out weekly. Also very very good macro stuff. And if there's something I don't understand in there, I take some notes, and I make sure that I study these things just like if I would be at the school desk studying for
Yeah.
a test basically. And I take all this information in, and then I make sure that I understand it. So just in a few months or so, I'm really starting to get a better understanding of what all of this means. But that's just the first step. The first step is understanding what it means, but then the implications of all of this, and trying to paint the picture or create a story of if the current situation is shifting, then what will happen to the market, and what are the signs of that actually shifting? And the end goal of this, for me at least, is to get my CMT title, and from there have a good understanding of technical analysis. And when I'm done with that, focus on macro analysis and create a foundation that incorporates both of them with equal importance. Because I think that is that's like being your own hedge fund. It's like it's a superpower. I mean, it really is.
The thing I was trying to think of before was the SLR, supplementary leverage ratio for banks. So basically, just decreasing the amount of capital they have to hold to loan out. Just before you go, Dirk, I'll speak. A place to start, I would say, as far as books. I haven't read that many books on economics and that kind of stuff. I would say most of them are kind of useless. Really, it's all textbook theory. It doesn't play out in reality. That kind of thing. Yeah. The Ray Dalio's books are a great way to start. A lot of these are a bit heavier reads, I will say. They're quite thick books. They take a bit of time. But run an audio book or something. Run it at 1.25, 1.5 speed, whatever you can read. I read stuff at like 2.2, so I just churn out books constantly. So you got like Principles for Navigating Big Debt Crises, How Countries Go Broke, big cycle, and The Changing World Order, very good. So those three, I would say, from Ray Dalio. George Soros does actually have a couple good pieces. He's got a whole bunch of bits all over. And then the final one is, as far as ways of thinking and about risk and that kind of thing, is Nassim Taleb.
Actually, I haven't read his book, but I've read the articles based on his books, and
I think he's the most overrated guy.
That's because he hates Bitcoin, isn't it?
No.
And he's very opinionated, very whatever, and he has his certain ways.
Arrogant, which can make a very good investor, but
exactly.
he's so edgy, he just constantly gets into fights with everybody.
Don't judge him by his Twitter account or anything like that. But the principles in these books are really good, and the sort of way of thinking and that sort of thing. Skin of the Game, Fooled by Randomness, and The Black Swan, very good reads.
The Black Swan,
and the Anti-Fragile is I've heard a lot about as well. Is that him as well?
Yeah, Anti-Fragile as well.
I would also recommend when we're on the subject of books, I would also recommend Howard Marks' Mastering the Market Cycle, and the most important thing. So Howard Marks' Mastering the Market Cycle is a really good book on the overall business cycles. And basically what he does is he goes through the different types of cycles in the economy and how to identify them and things like that, just to get an understanding of. And I think also one thing that investors...
Sorry, excuse me for 2 minutes, please.
Sure. One thing that investors could be doing as well, this is more technical analysis, but to study Dow theory, I think could be quite important as well. It's quite simple. It's a very simple theory, but understanding the Dow theory that's basically how I'm trading. My whole trading philosophy is based on the Dow theory, where you have accumulation, where knowledgeable investors get inside accumulation. So you got Warren Buffett, for example. Warren Buffett is the knowledgeable investor. He buys undervalued companies in bear markets in accumulation. And then when, let's say, for example, Coca-Cola is crashing because of something, but Warren Buffett looks at the company and says, this is still a fantastic company fundamentally. It's going to recover. I'm going to buy lots of Coca-Cola. It accumulates and then it breaks out. And now people are saying, wow, Coca-Cola is breaking out. Now let's all get in. That's the public participation phase. And then that's the bull market. And then you come up into distribution. Now Warren Buffett looks at that and says, now we're above the fair value. We're now in a bubble. We're above where the fundamental value is. I will now start to distribute. So you get distribution because Warren Buffett exits, and then you get the markdown phase, which is when all the retailers start to realize that, okay, it's now over. They're in disbelief and all of that, and then they dump on the market and you come down, and the cycle repeats itself because you come back down into accumulation. And now Warren Buffett is going to say, now we're back in an undervalued stock. I'm going to start buying. Now, that's my whole investment philosophy. And that's the exact investment philosophy that I'm using for the US dollar, because I am now asking myself, are we in accumulation, or are we going to see accumulation lower? Where's the fair value for the US dollar? And this is how I'm applying. Dirk, we can't see your camera for some reason, just so you know. So the question is this the fair value for USD, or is this accumulation for USD? When do we know? Well, we could know if the US dollar breaks out here on fundamentals confirming that move. So for example, I'm not going to go into that because that's what I'm trying to learn today, in this process. But combining things like the books that LJ just mentioned, and things like Mastering the Market Cycle, with the overall foundation of understanding accumulation and distribution, and then just trying to follow the fundamentals, and then using price to confirm the fundamentals, because I think that's what you want to do. You want to use price and volume to confirm the fundamental shifts in the market. Because remember, the money is not made in, the money is made in bull markets, but the positions where the money is being made is not in the bull market. That's in the bear market. Okay, you want to make sure that you position yourself well in a bear market to reap the benefit of a bull market. And that's where this whole idea of accumulation and distribution and understanding the macro themes and when they switch could be something simple as just following the central bank policies, right?
Yeah.
When they switch their stance of interest rates. That's going to be the shift in the market.
Yeah. And so, like you were talking about Warren Buffett, just like him, when we were asking, how do I learn this stuff? It's by being massively curious and kind of looking at all the random stuff that people won't look at. Like, he sits there all day analyzing companies, looking at every little minor detail, all the boring stuff that people don't want to spend their time on because it's tedious and whatever. So yeah, obviously, if you enjoy that, that's great. It lends itself. You're going to do really well with that stuff. I do happen to enjoy macro, and for me, it's like a puzzle. It's like problem solving. I have a very, science-based background. I want to figure stuff out. I want to, go like, oh, how does this work? I like thinking about how things tick and what's actually driving it and that kind of thing. So yeah, if you can cultivate that kind of ethos, then that's always that goes the same for technical analysis or just, day-to-day trading as well.
But
technical analysis only answers the question of when and maybe how and to where, but the fundamental it answers the why. And I think the why is the single most important aspect of investing. Why is the market moving? Why is this happening?
Yeah, exactly. But in terms of the learning thing, getting curious and getting really invested to something, you're going to start finding all the nooks and crannies, and then that's how you can build your own strategy and that kind of stuff. The other thing, final part, I would say, as far as understanding it, is market positioning as well at certain key critical points, which then can set off the structure, even though the macro picture arguably calls for a different direction, right? So if everyone gets stacked too much into something, the market tends to go the other way, even though that's 100% correct, just because there's no one left to buy or sell. And then so as far as this, Jonatan, you're looking at the next moves for the Dixie, you can start looking at how much people are paying for, long dated options or stuff like that. Like, are people willing to pay more to protect for that upside? They're clearly expressing a dollar figure that they're willing to, put on that potential idea. Yeah.
The beauty about fundamental analysis is that you can create great results already with very low effort. And in technical analysis, it's quite hard to find an edge, in my opinion, because there are so many people doing the same stuff. But if we look at macro analysis, let's say for the next 3 to 5 years, you have an advantage, especially against AI still, because there's too much data, too much variables for AI still to analyze. And it's quite easy, in my opinion, to get into fundamental analysis. I don't think you need to subscribe to a lot of newsletters. Yet you can do that, of course, that helps. You don't need to read a lot of books, but and that's the central core of it, in my opinion. What LJ said earlier, you need to be curious. You need to be a little bit nosy. You need to be somebody who likes to solve puzzles, because that's what the financial markets ultimately are, no? Like a giant puzzle that all of us want to solve. Nobody's going to solve it probably ever. So you need to get as close as possible to solving the whole puzzle. Maybe if you just have like 2 out of 1 million pieces left or something like this, if that is possible. And in fundamental analysis, you can start with that very easy by asking questions, by having a chain of logic, so to say. So you start with something like, oh, I see the GDP is going down. I don't know what the GDP is. Then I look it up, of course. What does that mean for a country? What does that mean for example, consumption, consumer spending? Like if the GDP goes down, well, probably people are going to have less in their pockets. Why? Because the economy is doing worse. That means probably there are less jobs generated right now. Less jobs means people are dependent more on social welfare. They have less in their pocket. They can spend less pockets to consume things. If they consume less things, that means companies are probably going to have less revenue because they're going to sell less things. That means, on the other hand, then again, that they need to import less things. So it has an outcome also on the balance sheet of a whole country. And you can go on and on and on and split into different directions with this. And every time you encounter something where you are stuck, this is the point where you should ask yourself, okay, I don't know if X happens, what the outcome Y is likely to be. So this is the point maybe where you look up, where then something like AI can help you, or where you dig into history and look up like, oh, the last time we had a situation like this in the economy, what happened after this? This is basically how I learned my ropes. I also I have a somewhat official like background when it comes to economics, because I'm a banker by heart, of course, or by profession. But just because you are good in analyzing things like this doesn't make you a good investor. So somebody who studied economics is not going to be a good investor. If that would be the case, all those professionals out there would be able to forecast economic growth of countries, for example, on the point, and rarely anybody gets it right. But if you follow this chain of thought, you'll be surprised after even just like 2 or 3 points of inflection, where like your chain of thoughts need to branch off into different directories, because it just not only has like effects on consumers, also on producers, also on somebody exporting from China into the USA, for example. Then it gets really complicated, but also interesting. And like I, for example, once a day I go on a long walk for an hour where I think about things like this, where I just think about, okay, what is the situation? What do the actual numbers we have at the moment mean for the future? And I think everybody generates their own habits out of this. Be this like trying to consume a lot of newsletters and getting the most information out of this, be it doing your own experiment, being backtesting data. You, by the end of the day, need to find your own kind of way of chaining your thoughts and coming to a conclusion, of course. But I think when people hear like fundamental analysis, like the threshold is always very high, because people think, oh, it's like super complicated. You need to have so much knowledge, when it comes to it. You don't really need to do. Like a lot of the conclusions you can draw, you can just draw from a common sense of mind. Is that the correct term in English? Yeah. It's very easy. You don't need to
instinct and common sense.
Common sense. Thank you. Yeah. And you would be surprised how that already can lead you to conclusions. And the first time when you suddenly come to a conclusion, that you don't see the majority of people having, that is like really an aha moment, because when you found alpha, actually.
Yeah, I
I think
remember.
Yeah, please go on.
Okay.
No, sorry.
I was just going to say, I think I just wanted just to wrap up what Dirk said, and then you go. Basically, hit the nail on the head. Just ask questions. That sort of pretty much would have been the best way for me to say it earlier. I just ask questions and keep asking more questions. That leads you on to more bits and
You
more
said
bits.
that earlier, so
Yeah,
absolutely.
yeah, sort of. Yeah, I don't know if I said it, perfectly that way. Maybe I did, but and it's
Yeah,
kind of
you
like
want to
it
be
reminds me of
naturally
that clip
curious. Yeah.
of Richard Feynman,
Ah,
where he's talking about and people want to do science and stuff. They think it's this crazy thing and physics and all this, but that's because people are talking about stuff with like black holes and
yeah.
string theory and whatever else. But if you just start with the most basic things of like, I think he's talking about how does like a butterfly flap its wings, and you sort of just start there, and then you start building off into now you can build rocket ships and all sorts of things, right? But no one wants to start at that small spot. They want the big cool thing and yeah. And
Especially
quantum
nowadays,
physics
we
on top
all
of
are
that.
looking for the shortcut because we are used to social media with like every 10 seconds getting a new dopamine hit. But sorry, I cut you off now also, Jonatan. You wanted to add something, I think.
Yeah, go.
So I wanted to say, like, a couple of years ago, or yeah, probably a couple of years ago, I would see myself as a price maximalist, right? A technical analysis maximalist, and I would say things like everything is in price. We don't need fundamentals. Everything you need to know about the markets is in price because price discounts everything, and price is almost always not the fair value, but price is truth basically, and the only thing we need. So through that idea, I started studying for CMT, right? Because I thought, okay, so price is all I need, so I'm gonna make sure that I know everything I need to know about technical analysis, if that's the case. But then I started reading CMT, and over again, we get things like this. And this is actually the sentence that kind of led me into this path that I am right now in fundamental analysis. So let me read this for you guys, because I think it's super important for everyone out there, even those who are just trading on technical analysis. So here it is. While this curriculum focuses candidates on a mastery of the technical approach, you may have to rely on colleagues who have a deep understanding of macroeconomics, finance, and accounting, and statistical analysis to make fully informed investment decision. Being a subject matter expert, in this case technicals, it is not a crime. However, it would be arrogant to believe that such an expertise makes one fully informed investor, which means to really be a long-term profitable, fully informed investor in the financial market, you cannot just rely on price. And like Dirk also said, he believes it's very difficult to find a long-term profitable edge with only technical analysis. And I'm very much starting to understand that there's a lot of things lacking in today's world of trading, where a lot of people, they're focused only on price without understanding the why of price moving. And I believe that's one of the core idea of why you might see one trader today getting 10k, maybe 50k or more in payouts from a prop firm, but they're never to be seen 12 months from now. Like, where are they? We see them come and we see them go. That's because they have a technical system where they're able to get payouts from prop firms within maybe a minute, a 6 months period window for their system to perform, because it performs well in a certain condition. But to really be long-term profitable, and I'm talking 10, 15 years in the market, you need to be able to follow the cyclical nature of the financial markets and understand that the technical system that you're trading today will most likely not be profitable in 5 or maybe 10 years. And you need to understand why. And the why is the financial conditions, in my opinion. And I believe you don't have to be an expert at technical analysis or an expert at fundamental analysis to do this. You only need to understand the basics of both, and you will be ahead of most of the market participants, in my opinion, because simple system prevails over the most advanced ones a lot of times. And if you combine simplicity from macroeconomics and simplicity from technical analysis, and we're talking about just a 52-week breakout system by applying moving averages with an understanding of cycles, there you go. You can be a profitable investor with only that. It's not as complicated as we try to make it.
Price is like the black hole, if I may pick up this metaphor. It's the end point of information. After all information has been processed within supply and demand, then you come up with price. And price contains all information. I agree with that, but just because price contains all information doesn't mean you understand all the information that was flowing into it. It's like the Hawking radiation radiating away from the black hole. The black hole has all the information. It's not destroyed, but it comes out of a black hole in a way that you cannot understand it anymore.
And also, one thing that is so frustrating with today's trading space and especially the education today is that, like, people say, okay, so you have this candle and price is going to come down to this candle. There's a 95% chance the price is going to do this. And it's like, but the people that created that candle, how do you know that it's the same people on the other retest? It's like people don't like. It's not an algorithm that is driving the market. It's actual people with actual ideas and of the future. Now, of course, we know that like 60, maybe today, maybe even 70% of the stock market is automatic trading. It's maybe not a lot of humans involved. It's a lot of, but still, the overall arcing theme of the fundamentals of the market is based on shifts in geopolitics and central bank policies and things like that. And I think you have, and that's why we have this new segment that we named Fusion Analysis, because we want to bring this all together. We want to look at the fundamentals, we want to look at the technicals, and we want to see, do we have a fundamental reasons to move to or from certain levels? And can
you believe it? It was 2 hours already. Feels like we've just
good, right?
half
It's a
hour.
good conversation. It was fast.
We have Richard and Williams already ringing the bell and being impatient.
Right. What's up, William?
Yo, how's it going, guys?
Yo.
All good. How are you?
Yeah, good, mate. Not too bad. Not too bad. Good to be back in the office. You know, I went away this weekend and I've come back. I had a bit of technical difficulties this morning. My screens, my computer just crashed and basically computer said no. So I'm all good now, and it feels so good.
Just no. Yeah. I love it.
Yeah, literally. So, man, it feels good to be back in the office. I feel like I'm properly back home. You know, home is where the office is.
It is like this. That's the heart of a trader, man.
Yeah, 100%, mate.
Yeah, happy birthday.
How's everyone's been though? How's everyone's weekend been? You know, it's Monday markets.
Oh, the weekend has been interesting, especially for someone who's deeply, within the crypto industry. I've spent a lot of waking hours trying to understand what really went down, and so it's a very interesting.
Kept myself from screaming into my pillow because my account went down by 11% just because I failed to implement those circuit breaker checks when it comes to volatility and got executed on sell orders $4,000 lower than the last candle was.
I actually did not lose anything. I actually doubled an account on.
Just rub the salt into my wound. Thank you. Much appreciated.
Yeah,
I like to come back next Monday.
I managed to open a 1,000 times leverage long on gold. On Bitcoin at the very low.
You managed to buy.
Yeah.
Awesome, man. That's good. That's
I got in 1,000 times leverage, and I bet my whole account.
And you made 200 million.
Yeah, exactly. He's now sitting here.
Seriously, you look at that and you're like, okay, so how is it going to drop any further? Like, you look at the altcoin market, it's like everything's dead. Like, everything's basically is dead.
No market anymore.
Like, every company out there in the crypto industry, if you can even call them companies, the altcoin, there's like, okay, they're all dead. And then you look at Bitcoin, it's like 10% to the downside. Yeah, I'm I'm buying this. It's not a 30% drop to the downside in the start of the bear market. It's just a move straight down to support. Like in the chart of Bitcoin, nothing happened. Like nothing happened.
Yeah, I think it was quite a good test for Bitcoin to see that, held up the way it did.
I love
I think
I'm even more confident in Bitcoin after seeing this move, because basically the whole altcoin market died and Bitcoin's like, yeah, I'm a Forex pair now. It's just it's amazing.
Yeah, that's why I always say, who needs altcoins? Bitcoin is the black hole sucking up every. I like this black hole metaphor today. I think
You really like black holes. That's something we've
that's something very naughty
learned today.
potentially to say. Also, yeah.
Yeah, well, you don't have to. It doesn't have to be unless you actually say this.
Yeah. Jokes on you.
Yeah, exactly. All right. Will, Richard, it's time for you guys to take over. Dirk, myself, and not sure if LJ is going to be staying around, but I'm going to be jumping off. And I know, Dirk, you're going to be doing the same. Guys, thank you for these 2 hours. Feels like it's only been 30 minutes. Very interesting discussions, and I really do enjoy this. And if you did enjoy these conversations as well, make sure you hit that like and subscribe. We have a goal of hitting 1,000, no, not 1,000, 100,000 subscribers by the end of the year. And looking at the trajectory, we're not going to make it. We're not going to make it at this rate, so we need your help. If you're watching this, which I know a lot of you watching are not subscribed, so make sure you do hit that subscribe if you want to see us succeed with that 100K, which I know you want. Okay, guys.
Indeed.
Happy trading.
See you later, broski.
Take care.
Bye-bye.
Bye.
Enjoy.
And then there were 2.
I was literally, and just like that, they're all gone. Mate, what's...
Don't worry about it. That's right.
LJ, what's good, man? Dude, I swear, like... Oh, he's gone again.
Jokes. Just 2.
Dude, I swear, like, someone's been in my office when I've been away. Like, my camera feels a bit odd. It feels like it's, like, off-center. Dude, I don't know. Jonatan saying that he doesn't think on the trajectory that we're on that we're going to get to 100K. Guys, let's prove him wrong. Come on, let's absolutely smash that like button and make sure we subscribe to the channel for those of you who aren't already. Because, guys, look, come on, where else are you going to see such awesome hosts for the trading industry? So, guys, make sure you do sub that button. It does go a really, really long way for us here at the 5ers. So, guys, hello. Oh, we're back. Oh, in fact, no screen.
Did you manage to sort out your Wi-Fi? Because
What's going on, yeah.
I'm looking at your camera and you're a bit blurred.
No, I think that's just my camera, mate. To be fair, I think I need to get I need to invest in a new camera. Guys, if you know any good cameras, let me know. I think I need to get a new one. But we'll cope with this for now. It is a bit grainy, this camera, but my Wi-Fi seems okay. My Wi-Fi does seem okay at the moment. Right. We'll see. So, guys, just to update you, typical Monday markets. I hate trading on Mondays. I'm a bit like Garfield. I love Mondays because I feel like, especially with the Apex Brotherhood group, I say hello to them all on a Monday morning. It feels like I just jump back in with my family, So it's really nice. It feels like I've just jumped back into the office and. I say hello to everyone, and then I come on with the 5ers, and I jump on with you guys. I say hello to you guys, and it just feels like really nice. It feels like I'm back where I belong. However, I'm a bit like Garfield when it comes to I hate Mondays. Like, Mondays really suck, man. The markets are usually slow. If there's NFP, usually it tries and compensate or make up for high impact news that's happened on Friday. Not only that, there's a lot of tentative data coming out at the moment. There's a lot of we're still in that US shutdown. So, oh man, Mondays are they're a bit meh. So let's just update you with what I did this morning on gold. Now, for those of you who have been watching gold this morning, some of the guys in the community took some awesome buys from on the 5-minute. I think someone bought from here. No, someone bought from here and someone bought from here. So there were 2 really, really nice trades just down here. The others, the rest of us who aren't as good at trading apparently, like myself, it was a break-even day. So I'm $5 up for the day. Now, I thought we did hit new all-time highs, which is absolutely awesome, by the way, guys. You know, we're so close to 4100, which is it's insane, guys. I didn't realize we'd reach 4100 so quickly. So we've just consolidated. You know, we hit about, what do we hit? 4780? 4078. So nearly 4080. So 4078 was our peak. And then we've just oscillated, you know, we've just sort of consolidated around. And then if I zoom in a little bit, there we go. There we go. So if we zoom in a little bit, we got this price action here. And then we got candle 1, candle 2, started moving above. Candle 3, we came down, wicked, rejected, moved up, and I bought here because I really thought we were going to close. And I thought, okay, I'm going to buy here. I bought, it shot back down, closed, opened, and then some new candles came down into that pullback. Now, unfortunately, it was a break, but it wasn't a break and close. Very little momentum. We were in this uptrend, however, so there was confluence. And then I thought, look, I'm going to scale in and see if I can get out at break even. And that's exactly what I did. I scaled in, got out at break even. Now, we would have gone higher, and I probably would have been able to smash about $200-300 today. But guys, like, it's just the momentum wasn't there. And if we zoom out a little bit more, especially if we go into the 15-minute, like, okay, now it's starting to move a little bit higher, but price is doing nothing. Look at this. I can completely delete this because it's irrelevant. Like, we've put in this consolidation low here, and we've also put in this consolidation high here. So price has just been a bit garbage on gold. So real shame that, but, you know, it's better than a losing day. A scratch day or a scratch morning is better than a losing morning. Richard, but you had a few nice trades though. Walk us through your EU and GU. You had some awesome trades this morning.
Yeah. I had a very quick sell on pound and on euro. I've removed all of the drawings because that's usually what I do after I've finished with the trade and I've documented everything. Then I remove it because I don't want that analysis still sitting there while I'm looking for a new entry. So I'll just quickly go through GU. So pound, basically, this was Friday's high. This was that nice little news event that we had. This is on the 5-minute. So on this area, I just had a little support zone that I marked up. At the end of day on Friday, price pushed back into it. This morning during Tokyo, price again tempted after like dwindling down a little bit. And then just before London open, it once again tapped into the little area, and then the reaction happened. So we had this very nice downward reaction, which swept the Tokyo lows completely. Then we had a small little pullback. So from this area down here, came down, it pulled back ever so slightly, and then it started pushing lower. If I go on the 15-minute, it was perfectly in line with my drop base drop, what I look for. Now, this is when we were already streaming this morning. So my anticipation is we've had the reaction off of an established area. Obviously, we've had multiple reactions off of it. We've pushed lower strongly. We create a bear base and then a confirmation candle, which is this bearish candle right there. Now, unfortunately, I missed the initial move. So instead of FOMOing in and saying, okay, let me get in at a worse price somewhere over here as an example, I waited for price to come back to the entry point, which I marked up. When I noticed it was already in this candle. It had already picked up a little bit above and then started pushing lower. So I just waited for price to close and come back to this area. It tapped in, and I got my very quick 1 to 2. It was a very, very quick entry and exit. Within 20 minutes, I was done with this trade. And then I did the same thing on EU as well. The exact same analysis. Price created the high last week Friday. At the end of the day on EU, price attempted to push into it. Obviously, I'm already asleep at this point. price tapped into it once more, and then a third time after the initial creation, and then it pushed lower, attempted yet again. So this is basically a double, you can almost think of it. There's the first, and then there's the second one, and then it just absolutely dropped. So price pushed lower, it almost took out the whole of Tokyo. It made a little bearish base. Well, in this case, it's bullish candles in a bearish trend, and then started pushing lower. Same idea, but on the 15-minute, I was looking for an entry, slightly larger than normal reaction. Also, this one I missed. The EU and the GU trade happened at the exact same time. Marked it up, waited for it to come back to my pending order, triggered, wanted to, and then now I'm just waiting. I'm just waiting for price to carry on down to the most recent bullish base of last week. The exact same thing on GU, but GU hasn't even remotely come close to it at all, and then started reacting off of it. So I'm also just waiting for price to start developing nicely. So GU at the moment, I'm not yet ready. It's consolidating ever so slightly in this area for me. Sorry, my mouse is still double clicking. It's still consolidating in this area. I would love to see it break, retest, and then continue lower, and then sweep whatever liquidity is sitting here at the moment, which is smack bang in this high news candle, because this was the news on Friday. Let's not call it news. Let's call it that little Trump tweet caused this move. So I want to see whatever is here to be completely swept before we start potentially going lower to try and get to this base area, which was, to me, the last point where the sellers were really interested in the market before the news event kicked in. So then I want to see what reaction we have here, and then I want to see the exact same reaction on EU as well. I want to see what is the reaction here. But for now, I'm still very much bearish. I would like to see price move lower. That's my confluence for today.
Yeah, nice, mate. I was just seeing. I saw your analysis on the pound. I just looked over at mine. Very similar. I'm predominantly looking at the euro at the moment more than the pound. The pound looks good. I think the pound's got more downwards potential than euro. But yeah, I like the euro right now. If I move over onto the pound here, we can see that we nearly got my entry. You know, I wanted to see price pull back up.
I'm not seeing your screen, Will. There we go. Seeing your screen now.
Yeah, you should be.
Yeah, we're seeing it now.
Okay, awesome. Let me know, guys, if you can see my screen okay. Like I said, I was going through a bit of technical difficulties earlier. So, I don't know, drop it in chat if you can, if you can't see my screen, or if you can see my screen, let me know. Yeah, so we nearly got that pullback. We clearly got that drop, clearly got that break to the downside, structure, shifting, breaking structure, consolidation, breaking structure, pull back. Perfect pullback if I wanted to be trading this, by the way, guys. But I didn't. I wanted to see a break and retest. I wanted to see it come all the way back up to this level here, wick a couple of times, consolidate, then start dropping. So, I mean, technically we're only... If I go average, we're about 7 pips lower than I wanted to be. Am I saying 3 to 7 pips? So 3 to 7 pips lower than I wanted to be. But then now what I want to see. Now there's 2 areas that I want to see break. Now we're starting to form this sort of consolidation here, and we've got this low here. So current low, and do we want to mark out a current high? I mean, current high technically here. So, we got previous high, previous low, break and retest line, and then current consolidation. So these are our 4 lines that I'm currently interested in. And they're the 4 lines that I predominantly draw on my chart, is previous low, previous high, and then current high, current low. Sometimes current high, current low is the consolidation zone. So, I'm very careful on how I mark out current high and low. but previous high and low also does help me identify, especially with trend. So we've got current high, previous high, break, bit of consolidation, I suppose, but break, previous low, break and retest. Didn't get the break and retest, but we have got the consolidation just below it. If we can break to the downside, I may consider market selling. Have a look at considering a pullback, but I doubt we'll get the pullback. I don't know if I want to get the pullback, and then hopefully we can get a break to the downside of this level, and then chase. Where would I want to chase? Where I say chase? Where would I want for price to come to? Either this high or this low. So that's why I draw boxes, guys. I like the idea of ranges. I'm not the type of trader that looks at specific key zones. Specific key levels. For example, round numbers, half numbers, liquidity levels, and you can tell in my terminology, I keep accidentally saying the word zones, and that's because yes, price has specific points it wants to go to, but in my opinion, what I want to see in price is zones. I want to see what happens during certain areas between A and B, for example. And that's why I've marked out this area down here, is because it's a zone. There's this high, there's this low, and then there's this previous low here. So that it's within a zone that I want to see price come to. And what happens during that zone that's where my discretionary kicks in. It's like, right, okay, we've come down to here, we're consolidating here. Okay, now let's start considering taking out. Let's move a TP. Let's analyze the markets now. However, if price just absolutely bashes through this low here, it's like, oh wow, that zone was disrespected and it just went straight through. So it helps me identify areas that I want to redo an analysis and see how price is looking. Because if price consolidates up here, then I'm thinking, well, if price is consolidating above the zone, the chances of it getting to the low of the zone are less likely. So that's why I talk about areas and zones and never specific price points other than breakout, highs, lows. So very similar with EU, guys, is we've got a break and retest. So we got this breakout of this low. This is the sort of shift in structure. This is the identification of the downtrend. Now, like Rich just pointed out, we've got so many taps along this high here that it just melted. I thought we were going to take a high. I did. I thought we were going to wick first. We didn't. And then we just melted, consolidate a little bit, dropped further. Now, there's two areas I wanted to see a bit like GU. I wanted it to retest this high, this consolidation high, or at least this little small time frame consolidation here. It didn't. What it did do, very much like GU, let's have a look, go from average to average, go from like middle to middle. It was about 14 pips. So 14 pips lower than I wanted it to be on average. And we have started consolidating. We've broken and closed below. Now, we haven't, however, broken and closed below this previous low. Now, if we can break and close below the previous low with a bit of momentum, then I'll probably be trading EU for the sells. However, we've got 1, 2, 3 wicks to the downside. We've got 2 candles and an indecision candle at the moment. Price is slowing down. So what I don't want to be doing is jumping into a pair that is slowing down. Gold, however, on the 15 looks nice. Let's have a look on the 5. We missed the breakout trade. Maybe we can get the retest. Oh, God.
On gold. Yeah.
Yeah. If we have a look at gold here on the 5 minute. Again, guys, it's all-time highs, and we've got 1 tap, 2 tap, 3 tap of this high, and we've got 1 wick, 2 wick rejections, and then we've decided to break out. The characteristics of gold hasn't been that nice. We've really struggled to push above. So depending on what happens with this 15-minute candle, we could see price wanting to continue higher. So if we can get a nice bullish close, maybe a retest and a continuation higher on the 15-minute, I don't think I want to trade gold on the 5-minute. I think it's a little bit too uncertain. There's too much.
It's made a very lovely bullish channel on the 5-minute.
Yeah, very much so.
Very lovely.
It has. However, because we're so close to we are creating all-time highs. We're $17 away from 100. So I don't know. We just got to be very careful, be very vigilant, and maybe lower my risk a little bit. Gold, the S&P, NAS are doing nothing. Wow, NASDAQ and the S&P. Wow, look how similar that price action is.
Yeah,
Dude,
they're quite correlated.
Yeah, they are. That's crazy. Yeah, so GJ, I can check GJ if you want, guys. I think I got GJ. No, I haven't. I'll have to get it. Unless you have it on standby.
I have everything
Okay,
ready.
I'll tell you what, then Rich will do a bit of a top down on GJ for you, because otherwise I'm going to have to try and hunt through everything for it. So that's my views on gold. Gabriel, Rich will do a GJ for you now, mate. So I'll jump onto his chart now, and then we'll have a quick look.
So this is the hourly chart on GJ at the moment.
GJ haven't closed the gap, apparently.
No, there is a small little. Where's my box? There's a small little gap down here. If I just go down to the 5 minute, there's a little gap here that has not been taken out.
Is that the gap that we're referring to, guys?
Well, there was a gap here as an example. There we go. But it hasn't filled this gap here. But I think that there's a much larger gap as well from last week.
I was going to say, I'm sure there's a gap from last week.
Here.
You know?
So we have this gap here.
Yeah, fair. That's a decent gap as well.
Yeah, which has not been filled.
Wow.
And we've moved a little bit closer to it, but the most recent attempt is still very far low, and we've made another gap yet again from what happened last week till now. So, and we've been trading above this gap. Not even talking about the previous gap. We still have this one that still needs to be tested. So the whole of today, just on the 5 minute, we have slowly but surely from this point made higher highs. So it's technically an upward trending channel. But it's so short term, especially with the fact that we have these large gaps. I do think that this is going to come down at some point to come and test these gaps. But the amount that it needs to drop in order to even remotely come close to the previous gap is from where price is currently all the way down here is 2,600 pips. So it's $2.60 or £2.67. two yen 67 that it needs to drop. It's massive. It's a massive reaction that needs to happen there. But just on the short term, where we are now, if I just remove this drawing here, we were from last week. This was Thursday, coming into Thursday. So we were bullish going into Thursday last week. The beginning of the week is over here. So first gap, bullish the whole week up until the end of Wednesday. Wednesday we started going bearish, pushing lower. There was an area over here that was swept this morning by this, or last night into the morning, by this a massive candle on the 15 minute. And then since then we've been trending a little bit towards the upside, but nothing strong. I honestly think that we have an area over here that we're currently testing. We had multiple tests of this area. There's a singular test, there's another one, and we have our third one. We haven't broken above yet to signify that we're going to carry on going bullish. We're still in a bearish structure, in my opinion. If I were to look for any sort of trades just on the short term, just on in intraday, I would still be looking for potentially a selling point. I would like to see price test in this area again, or just before, let's say either there and then start pushing lower, and then potentially come and test this lower point over here, or at least fill the gap. at the very least, this tiny gap that is here from last night into this morning. But I would rather want it to come and test somewhere around here on the day. That is what I'm looking at GJ for. I've got a bit of a bearish bias on it because I don't see bullish momentum whatsoever. But that's just me. That's on the 15-minute. On the hourly, do we have any specific areas that is open for a test? It has tried making a higher high on the hourly this morning. It's at least higher than last week's New York session, but it hasn't closed above on the hourly. And then we also still have this area over here on London open, and then the whole of Tokyo that still needs to be tested if we're gonna even consider pushing higher. So yeah, bearish. I'm bearish on it because of the lack of bullish strength. That's what I'm seeing. Where's the testing points? It's really going to depend. Here we have a little bit of short-term consolidation on the 15. It should make sense. On the 15, we were struggling, not really going higher, not really going lower. Break lower, push back in, reaction, push in again, and then continue lower. So this area up over here might be a potential test point. But we also, like I said, we have this point where we are right now, where it's testing currently. That could be a potential reaction point, even though we're not really getting the massive push lower from within this area. Whereas here we had that reaction, we had a slightly less reactive reaction there. And remember, this move here created a new low, where this reaction over here did not, and this reaction here also hasn't created a new low either. So potentially a chance for a little bit more upward attempts before we finally run out of buyers and then just plummet lower. But yeah, I'm still bearish on GJ.
Yeah, I'm just looking at US 30 at the moment. I'm in a US 30 sell actually down to the Asia lows. However, my TP is down at the gap fill, but whether we'll take it down that far or not, I'm not sure yet. Also, I put the music on, but it doesn't. I don't know if I can put it on repeat. I don't know how to do that. Remy, I don't know if you know how to do that, mate, but it's nice to have some background music. Do you know think? I don't know, guys. Let me know. Like, there is someone calling me. It's an unrecognized number. Can you give me 2 minutes, Rich?
You need to take a call.
Yeah, please, mate.
All right, no problem. No problem. You can go.
Never mind. I missed it. I'm expecting an important call, but I don't know what number from. And that was just an unrecognized number. If
it's an important call, they'll call again. So.
Exactly, mate. Yeah. In fact, US 30 is jumping up. What's going on? In all fairness, I do say to people, I was like, don't call me between this hour and that hour and that hour. So it can't be that important.
GU is starting to move up significantly in relation to where it was trading earlier. This was the low point created on the day, and this is the high point of the day, pretty much. We're just slowly moving lower. We have this little area here from pretty much from last week. Well, from Friday. Man, I need to seriously sort out my mouse. It is a problem.
Oh, what? Dude, you had an entire weekend. Why haven't you bought a new mouse?
Well, birthdays and stuff like that. Like,
valid.
It wasn't really anything that I could. But anyway, so we have this little area that prices 1, 2, 3 bounces off, breaks through, comes back to it, 4, 5 reaction of this area, and now it's pushing up a little bit higher. So I was bearish this morning. My bias was bearish, but I am a little bit more bullish bias now, with the idea of this top section here being tested now first. It depends on what this candle is doing. I mean, we are already past lunch on GU, so you expect price to start slowing down ever so slightly around about lunchtime, because people are going for lunch. They're not in front of their charts all that much. Institutional traders as well. So you do expect a little bit of a slowdown at this point in time, but now we're seeing a more volumetric movement in relation to what we've been seeing going upwards normally. So there you have an area where it's attempted to go a little bit higher. Here's an area that attempted to go a little bit higher, and now we're finally getting nice volumetric candles pushing it higher, and we will see the same on EU as well. Well, not really. We're not really seeing the same thing, but EU has made a double bottom. So this was earlier, and then we wicked here, and now it seems as though we're having a bit of reaction. There we go.
I'm now in $70 profit, 78, 80, 87, $90 profit.
Are you in a trade at the moment?
Yeah, I'm in US 30, $100 up.
Oh, okay. Do you wanna show it on chart on screen?
Not really, no.
And one people judging you.
Yeah. Depending on how this close does, I'm also I charted it up on TradingView. I like charting on TradingView, but I like executing on MT.
Oh yeah, sorry Kavika, I said 2000, I meant 200 pips. Sorry.
Interesting. This could be interesting to see what happens now.
Mitten asking, by following your trades in the 5ers, will account be blocked? Well, if you follow our trades on stream, it's technically copy trading.
So yeah.
So I would advise to do your own analysis and take your own trades. Don't ever copy someone else's trades. Kavika saying your indicator looks like a bearish divergence on. Yeah, this bottom one for mine is just a MACD, so there might be some sort of bearish divergence on the MACD itself. Sebastian asking you to check NASDAQ.
Yeah, I can check NASDAQ. I got that here. $130 up. Okay. So this is NASDAQ. NASDAQ. Ooh, NASDAQ's dropping quite nice. Hello. That's quite nice actually. For those of you breakout trading the NASDAQ. This is on the 15-minute. We've got a lot of potential a lot of upwards potential. Now, I'm not too interested in the upwards potential because of the size of this gap here. Absolute monster of a gap. Not only that, now we've got this big breakout to the downside. It could either be a break and retest, or it's just a break and continuation. Like, I don't really trade this on the NASDAQ. I usually jump down to the 5 or the 1 minute and wait for a break and retest, just because it's a little bit safer. Heading down Asia lows, where would that be on the NAS? I'm sure I've drawn that out. It's around about here somewhere. Let me have a quick look. It's around here. I'm sure this is, yeah, this looks, I'm sure we're 2 hours difference with MT. So I'm sure Asia lows would be here. So having said that, if you are going to chase Asia lows, that would be nice, but I'd be tempted to chase the gap. A little bit what I'm doing on US 30. We are heading down towards Asia lows at the moment, but I'm kind of looking at the gap like, can we head down to the gap instead of Asia lows? I think Asia lows are going to be around about here somewhere. So very similar price action, very correlated between NAS and S&P right now. Or NAS and SPY, for those of you who call it SPY.
SPY.
The S&P. That's another one. Like, why do people nickname things like cable? Why cable? Why not just GU? Like, I don't mind the abbreviation. Like, you can abbreviate an abbreviation. Like, we got GU, GBP USD, Great British Pound, US dollar. Oh no, let's just call it cable. Like, can someone educate me on that? Like, I've never understood it. I've started calling it cable, but I don't know why. And I feels like hypocrisy. It feels like, you know, I'm having a go at people for calling it stupid names and not understanding why, and then I do it myself. So yeah, SPY I kind of understand. SPY, SPY, S&P. No, that kind of makes sense.
Salt and
There we go.
pepper.
Salt and pepper 500. Oh, dude, I like that. So, you know, that makes more sense. That's funny. That's good. That's a good nickname. I rate that.
Louis saying the cable under the sea.
Yeah.
It's the connection.
Yeah, the connection, the cable between US and I was going to say Europe, GBP, so Great Britain. Yay, $200 up. That's nice. How close are we to... Ooh, we're getting close, guys, to the Asia lows on US 30. We're dropping nicely. What about NAS? NAS is looking...
NQ is slowly making its way down.
I like NAS, man. I quite like this for...
But it is so much higher on the day already. And there is a gap as well. ES, NQ. Okay, gold didn't have one. Dow Jones also got a gap. Oil got a gap. They're all gapping. So yeah, there's a chance it could come and fill it, but will it fill it now? I don't know.
S&P again. Yeah, S&P's got a nice big gap. Sorry, was I talking about the S&P this entire time? I meant US 30. Sorry, guys, I meant Dow Jones. I'm trading Dow Jones right now, US 30. Just in case I was an absolute melt and I decided to call it the S&P. I haven't once looked at the S&P. Here's the S&P, guys.
It is melting right now.
It is melting. Yeah, fair. It is melting.
It's the biggest reaction in the last few hours. So,
dude, the S&P is heading down to the gap now. Wow, that's looking quite nice, actually. So here's where the gap, the recent gap high.
Yeah, there's a potential for it to come and test it.
I think at minimum we're going to test it, you know. So here's Asia low, and here's the gap. So we're 0.25%, so a 0.25% off between the Asia low and the gap. So let me have a look at the Asia lows. Where's the Asia lows on the... So here's the start of the gap. Or the high of the gap, not the start of it. Asia lows, I'm 90% sure, without trying to do some mathematicus. It's around here. Oh, that's... Okay, that's quite nice. I like that. That's... What would I be looking at for TP in there? Is that about 350? Yeah, 352. 352 risking. Okay, that's above us. That's more than a 1-to-1. What was that, 1 to 1.4? That's quite nice.
Pradana is asking, guys, any suggestions? Ideal lot size? Whatever you are happy to risk. If your strategy says that you should be risking 1%, then work out what is 1% of your account in terms of the pip value, the lot size, and so on. If that is something that is according to your plan, then trade it like that. But mathematically to work it out is not very difficult.
Dude, I missed that first part. You just, like, computer said no for you. Like, it went...
I said, it's a question from Pradana. It's asking, guys, any suggestions? Ideal lot size for an gold 10K account with
Oh,
50
okay, fair.
stops. Yeah.
Full margin, dude. Like, yeah, like look, if you want, like, okay, 50 pips, match your stop. 50 pip, 50 lot. That's the safe.
Are you going to preface? You're going to put a little asterisk there? A little...
Yes, dude, this is not financial advice. Please don't do that. No, you can definitely work it out. There's lot size calculators out there for those of you who are too lazy to do maths, a bit like myself. There are lot size calculators out there. Do not panic. But 10K account, 50 pips stop loss.
$100 is 1 pip on a 10 is 1% on a 10K account. So $100 for 50 pips, that would mean that every 10 pips is equal to $20. That's basically what you're working out.
Yeah, just I'll tell you, just try and
so
find.
that would be 0.2 lots.
I'm sure funding pips do it. Is it not funding pips? Pip learning pips. Let me try and find it. Learning pip, baby pips.
Baby pips.
They do it. They do one. Let me try and find it. If I can find the Forex calculator, I'll drop it in chat. They're fantastic. Like when I was really sort of struggling, like working out my lot sizes, baby pips that's where I went. Let me see if they still have a Forex position calculator.
I think they do.
I'm sure they do, mate.
You do, yeah.
They're really good, guys, for those of you who are wondering.
Yeah. USD CAD sell manual. We'll get to that one in a moment.
Oh, no, something went wrong. Oh. What? Oh, okay. Well, they do have it, guys, but it just crashed on me. Oh, let's see if they have XAU. Do you know if they do gold?
I think their Forex calculator has also got a metals one as well.
Oh, it's a good one.
But like I said, to work it out is not very difficult.
To be fair, it's not very difficult. You can do it. I'm quite lazy though, so I like it. Dude, I like a calculator. I'm pretty lazy.
Fair. I mean, it's good to know how to calculate it.
Yes, absolutely. No, it is good to know. As long as you know what a round lot is as well, you can the maths. It's super simple.
Yeah, so I like working it out on what 1 pip movement would equate to in terms of equity. So if I'm looking for $100 or $1,000, how much would that one be? That 1 pip movement or that one contract movement?
Yeah, exactly that, man.
The maths is tiresome though, especially when it comes to yen. I mean, if you're looking at like the yen pairs, it's generally 67% of what the value is of a non-yen pair. So 1 pip value would normally be 0.67 multiplied.
The maths is tiresome though. Dude, I relate to that. I'm not a maths guy. I don't like. Richard Wells is a fantastic maths guy. My brother, my dad, fantastic maths guys. Rich, you like maths. You know me, dude. I'm a bit like you, Stu. But you know I'm Stoob Dog. What a sick name. What an absolute sick name, Stoob Dog. I like that.
So we've also the baby pips tools position size calculator. Remy has pasted it for us in the chat, so you can just go and click there, use that one.
Yeah, nice one. Thanks, Remy. So guys, go do that if you're too lazy to do maths and you're a bit like me. US 30 is not doing much. Okay, so NAS is having a bit of a pullback. That may be nice. Gold's going up. S&P.
Gold is doing gold, mate.
Fair. Gold's doing gold things. Gold is doing gold things.
I do subscribe to the idea that even though we're creating new highs every single day almost, when we are making new highs, there's always a little bit of a reaction and then a slow continuation going higher. Not to say you should be buying at highs, but I think it's something that if you pay attention to it, you'll start seeing how deep of a retracement we're getting on specific days, and maybe you can then formulate a plan around that, as an example.
Mm-hmm.
But Prada, just to Pradana, sorry, just to circle back to your question in terms of the lot size. Always think about your risk in the idea of equity or in the idea of a dollar value. It just helps kind of make the equation a little bit easier in your mind. Like for 100K, you know that 1% would be $100 because it's 10,000 divided by 100, you get 100. So I know I want to risk $100 per trade. I need to then just figure out what my 50 pips in this case is what I'm trying to offer up, which is technically $5 of gold movement. So the movement from 0.485 to 0.49. That's $5. That's 50 pips. So I want to know how much I'll be risking at that point in time. Is it how do I risk $100 equal to that 50? And it's going to be 0.2.
Boring. Put it in a calculator. Save yourself some effort.
Yeah, that's true.
I'm joking. No, guys, all serious. It's good to know how. It is good to know how. Even if you never use it. Like, it was back in back in school, man. Like, I hated maths. And I always used to say, but when am I actually going to use this maths? I was like one of those kids, one of those kids using, shut up, man. And I was one of those kids. And now that I'm an adult, I'm like, dude, like I've used so much of the maths that I learned in school. Like even the stupid equations, like the stupid garbage pi r squared sort of equations, like a squared plus b squared equals c squared. Like I've used them equations, and you're like, God, I hate my maths teacher right now. It's like she was right. I was gonna use this in real life. I just thought I was too cool for school. I thought, oh yeah, I'm never gonna use this. When am I ever gonna want to work out the area of a triangle? No, it turns out, guys, who knows? You will use it. So when it comes to your working out your pips, what if one day baby pips crashes, or the lot size calculator stops working, or you're there and you're trying to make a quick decision on, your risk analysis, or you're trying to work out whether it's worth your time, and you've only got a margin because the margin of time, because maybe price is moving in a certain speed, and you've got to make that quick decision. You got to know how to calculate it. You got to be there. Don't get me wrong. I'm there with a pen and paper with my tongue hanging out, trying to work out on my notebook. But whatever it looks like for you, you need to know how to do that equation. So yes, it sounds boring. Sometimes it can be crap, but just understand you need to know how it works.
Yeah, it's like the same idea of trading with indicators. It's better for you to know how to trade without them in the event where, for argument's sake, that indicator is now no longer available. Or if you have a strategy that's built around the use of indicators specifically, and it's not built around the idea of price action or supply and demand or stuff like that, and let's say it's a MACD strategy. Let's say one day they decide MACD is now no longer available for whatever reason. Are you still going to be able to trade? It's very much the same replicatable example about copying trades. What if the person that you're copying from goes to jail and is now no longer can no longer post their specific trades, and you have nothing to copy on?
What's he gone to jail?
It's a stupid example. Yeah, but what I mean is like it's a stupid example, but it's still the idea of what are you going to do in the event of, and then you create a scenario to say, okay, in the event of me not being able to trade on this Telegram group anymore, and I'm not receiving any more signals from this group, how am I going to trade? It's better for you to know how to do all of the stuff yourself without the reliance on an outside source. It's obviously not for all factors when referring to everything, but
Yeah, dude, never rely on outside source. You know,
Self.
never rely on that. It's not good.
Yeah. Joel asking, any thoughts on trading bank holidays, as obviously it doesn't put you off. As obviously it doesn't put you off. Like in the event right now, we have a US and Canadian bank holiday this afternoon. So, and we're currently trading right now. The way that I see it is that the market participants for the US and Canada is currently asleep.
I would say, yeah, literally that.
So there's no impact on my trading during London because the market participants during London is currently trading. So I don't base my US pairs on a US bank holiday if I intend on trading the London session. That's what I mean. So I think you can trade on bank holidays, but there's a caveat to that. The idea that the way that the volatility moves, or the volatility of the day during a bank holiday for the specific session, which is within that holiday, like for argument's sake, the dollar this afternoon. So the New York session might have unexpected volatility, or it might have unexpected movements, which is not in line with what it would have been if they were market participants like banks open on, during the New York session. This afternoon, we've got the two biggest players in the New York session, which is Canada and the New York bank holiday. So your biggest participants during the New York session, when it's only New York, when the London session and the Frankfurt session and all of those sessions are closed, and you only have New York, it's probably not going to be the most volatile market, or it's not going to be the most volumetric market. It might be a very volatile market. So you might see unexpected moves. So I would be careful. I generally do not trade during the session where there's a bank holiday. So if we had a GU bank holiday, I won't trade during the GU session, as an example, all that much. Or I would expect a little bit more volatility, so I would adjust my trading style to that.
Yeah, I used to take it as a day off. You know, like bank holiday for the US, I just take it as a day off. Now I'm a bit like you. You know, if it's a US bank holiday, I won't trade New York session. But if I don't fancy trading at all, I'll just take it off. But now that I stream every day, I'll just think, I'll just lower my lot size and see what's out there. And if there's a nice trade opportunity, I'll take it. If I win, I win. If I lose, I lose. I've lowered my risk, and I'll just see how it goes, sort of thing, you know.
I mean, it's a good example, or a good example is have a look at what the market does when we're getting close to the holiday season, like Christmas.
Yeah, that's a good one.
So go back and have a look at exactly, not exactly, but like in general, what price action is like during the specific session where there is a big bank holiday, or there's multiple bank holidays. Like usually around Christmas Day, there's so many bank holidays on Forex Factory, and then you just have a look at what it looks like. There is trading happening, but it's either non-existent movement or it is sporadic movement. Like suddenly it's like spiking and then spiking lower, and it's erratic. So just take that into consideration when trading.
Right, guys, just to let you know as well, I've taken out of US 30 just because the volume just went from hero to zero real quick. Look at this. This is 5 minutes. So 5 times, it's 20 minutes of nothingness. Now, we had a bit of an indecision. You know, we had that push down. Then we had a wick up, then a close. Then we had this big candle close down, which was really nice. And then we had that continuation candle, which I thought we were going to hit TP. And I thought, oh, nice. This is more like it. This is what we want to see. Turned into a rejection candle. And then we thought, oh, okay. And then 2 candles of pure indecision. And third candle where we tried to push higher, rejected a little bit, and now is shown to be an indecision candle. We've got 2 minutes until this decides on a definite candle. So I thought, dude, you know what? I'm just, I'm just not interested in this. There's no volume, no momentum. I want to be in and out as quick as possible on the lower time frames, especially when I'm trading indices. I want to be like quick move, in, out, let's go. And that's what I thought was going to happen. I thought it was going to be quick move, up, down, a little bit of decision, boom, found our decision, 1 candle down, 2 candle down, 3 candle TP, or maybe 4 5 candle TP. This seems to be, indecision, boom, candle direction, 1 candle, 2 candle, 3 candle, 4 candle, just indecision, and then hopefully TP. But I'm not waiting that long. I'm not willing to wait that long. So $167. I was up about $200-300. So, oh well. At least it's up. Better than a loss. I took a $63 loss and a $70 win, so a $5 net gain.
For today, yeah.
For today, for this morning session. Now, a bit like, who was it? Let me try and remember who it was. Henry, I think it was. Yes, it was. It was Henry saying, that's why you wait for a candle close. Yeah, mate, absolutely. That is why you wait for a candle close. Not interested in trading. I shouldn't have stepped out my rules. I should have waited and been a bit more patient for the candle close. Had I have waited, it'd be $167 profit today. So technically, I did still come out on top, but I'm not going to forgive myself for it. I'm not going to be like, oh, well done, Will. You came out on top. Well, even though you broke the rules. No, it's not. This isn't how we're going to play this game. I'm going to put it in my journal and say, Will, you gained $5. Ah, there we go. Now USD wants to start dropping. But that's what I mean, guys. It's too many candles.
That's now, yeah.
Yeah, it's too many candles too late. All this garbage in the middle. I don't want to be in that, this candle should have happened at least 2-3 candles ago. I don't mind waiting a little bit of indecision and trying to pull back and and ahhing a little bit, then move. I don't mind that. But when you're and ahhing this much, it's just zero volume. It's just garbage price. I don't want garbage price. So
Infinity is asking, Jonatan and LJ talked about gold reserve today. My question is, does UK have more reserve on gold? Well, if you're asking in relation to other countries, I think the UK is maybe, I don't know, 15th on the list of gold reserves in tons. I don't think anybody has more reserves than, for argument's sake, the US in terms of the gold reserves, but the UK does have a lot. They have.
UK currently have around 310 tons as of 2024.
Yeah.
But
I think that information is a few months old. It's second quarter.
That says as of 2024. So we're coming to the end of 25 now. So let me see if I can find an up-to-date one.
Henry is saying, Infinity, no, UK is 17th. So
17th, there you go.
Yeah.
Gold.co.uk, UK gold reserve.
Yeah, obviously, the mental wealth trader, you would know that Poland has a ridiculous amount of gold reserves. But I think we spoke about this last week. It has a lot to do with reparations. After the Second World War, where a lot of their actual gold was removed from the country due to the events that transpired there, and then that's just the reparations of it coming back. So
this is interesting.
Yeah.
So this UK said this is called gold.co.uk, bullion investment and vaulting. Says that AU price, so AU gold, AU price is at 3,000. Oh, okay, that makes sense. I'm looking at in dollars, so that makes sense. It says 3,057.21 pounds per ounce.
Yeah. It's about to say
I've programmed my brain to think in dollars.
Yeah.
So when I speak to anyone in the UK, anyone in any form of GBP conversation, I'm like, well, no, what do you mean? It's actually double that, or it's actually it's a lot higher than that.
We're so programmed to think in dollars.
I'm so programmed to think in dollars that, like, especially when I get a payout, man. When I get a payout and I look at it in pound, I'm like, huh?
What? I was
Why?
supposed to receive X amount in
Yeah,
dollars.
why
To
is
get
it
the
so much
symbol in the
lower?
front of it.
Like, dude, like, why have I lost nearly $1,000? But then I realized the conversion rate is crap, and I'm like,
Scam prop
oh,
firm.
yeah. Goddamn prop firm's a scam. Oh wait, no, it's not. It's just the UK's absolutely broken. You know,
This is why I
our
need a
economy is
calculator.
yeah. So I'm just in the wrong country, you know. God damn it.
Will, can you give me 2 minutes? I need to go talk to a man about a horse quickly.
No. If you talk to a man about a dog, I'll think about it.
I'll go and talk to him about dollars, but I need to talk to him about a horse first.
No, a dog. Sam, man, no worries. Talk to a man about a horse. I've not heard that one before. Talk to a man about a dog, I have. So let's have a bit of a catch up. Thanks for no problem. Yeah, guys, absolutely seeing the 5ers as well. Do not forget to like and subscribe, guys. It means so much to us. Like I keep saying, let's absolutely smash out this goal. Jonatan doesn't think we can get to it. 100k by the end of the year. What are we in now? We're in October, early October as well. So let's count October as a full month, even though we're what 12, 13 days in. October, November. We've got 3 months. What are we at now? How many subscribers have we got? We've got like 85k. We've got 86k. So that's 90, 100. Okay, guys, come on. That's doable. That's 10,000 subscribers a month. Maybe it's not. Maybe Jonatan's right. We can do it. Guys, come on. Absolutely smash that subscribe button. And guys, do not forget to share it with everybody who's interested. Share it with your mother, your brother, your sister, your uncle, your next door neighbor, your cat, your dog, your nephew, whoever wants to watch us have a bit of a banter and share all sorts of value. Oh, in fact, I'm going to take this pending limit off as well. Whoever wants to watch us share all sorts of value in the trading industry, whether that's fundamentals, whether it's macro, whether it's psychological or statistical analysis or technical analysis, we have got it all at the 5ers. So guys, make sure you come check it out and make sure you subscribe, stay here, click that bell notification and share it with who wants to join.
The horse didn't want to talk about US dollar.
No, what about the dog?
I don't have a dog.
You got a horse though?
Got a horse though.
Hung like a horse.
I've always got a horse.
Moving on swiftly to the pound. Let's have a look. Oh god, wrong pound. This pound. So we got this area here, which was really nice, but all too little, too late, if you ask me. Because then we had this consolidation here, but then we broke and closed above. I mean, double wick rejection started moving down, but I'm not interested in the pound anymore.
However, to go lower towards
EU's
my
looking
base.
nice, man. EU's looking really nice. So it's a shame. So if I move in a little bit, because I'm on the 15-minute time frame here, it's a real shame we didn't break and close below here. If we broke and closed below here, pulled back up to this level, dude, I'd be in full risk. Like, this would be a plus setup. I would be in a full risk sell on EU.
EU is a bit too low now for me to try and sell into this base. There's just not enough pips available for it to potentially react off of this base area. So I would like to see the reaction first from this base. But it's like let's not say as I anticipated, it's what I was looking for. I wanted price to start going lower. That's why I like my bases. I like my... it just makes sense to me that price would want to come and test a specific area. And I mean, we've had no indication of it attempting to go higher today. The highest point we had on the day was the Tokyo session and then an attempt just after Tokyo to push higher, and it failed. And since then, we've been pushing lower. So it just makes sense.
Yes.
So now we're waiting for a reaction, and then we'll see what happens here. After this, we'll see what happens. I mean, if pound starts doing the same, wanting to move lower, then sure. Then I can see taking sells on pound again. But right now, not interested in taking a sell on pound whatsoever.
No, I can't say I blame you. I'm not.
Yeah, I mean, EU just looks better, over the day. And for those who are wondering, I trade only intraday. I don't hold trades overnight. I don't care what happened yesterday all that much. I want to see if there's an area where it can come and test potentially, and how far am I from that area. And then I look at price action, and I want to see a trend created intraday. Short-term trends. Because I'm in the market, I'm out of the market, I'm in the market, I'm out of the market. I'm happy to keep an eye only on this little section these last 8 hours and be like, okay, this is what I see, this is what I want to get from it.
Yeah, nice. Do you have a target per month? So, like, would you look at the month and think, right, okay, I want to achieve 2% this month, or my data says that I can achieve 2% this month, or like, do you have a monthly target? Or do you just think I'm just going to trade it and see what I get at the end of the month?
I have a expectancy.
Okay, nice. So yeah, you have an
built around my strategy's win rate and the physical dollar value of those trades in total. So Will, I'm not somebody that risks a lot. So I'm generally 0.25% to 0.5% risk. Where it's very fortunate for me is that we have an exchange rate that is so favored towards the rand. So if I get paid in dollar, it's the multiplier is so high.
Yeah, you're a multi-million out there.
Yeah. So
you get paid out, you're like, yeah, money.
Like if the two of us had to compare ourselves in terms of what it is that we needed just on a baseline to get through on a month, and let's say we had exactly the same lifestyle, I would need physically less dollars every month versus your equivalent pound requirement.
Let's just put it this way. I went out for lunch Sunday, so yesterday afternoon. I went out for lunch with the missus and it cost me £61.
So the pound
what would that be to
rand
the
at
rand?
the moment is 23 rand to a pound. So it's 23 times what did you say? 60.
Yeah. So what it cost me £61.
So
That would be, so it cost me 2,452.66 rand.
yes.
That's how
Now
much.
that was just you and your significant other, right?
Yes.
Okay. So 2,400, yes? Is that what you said?
Yeah, 2452.
Okay, so let's round it down to 2,400. So
Yeah.
2,400 rand.
Mm-hmm.
Your whole family is eating a 3-course meal and then some. Like, I would say the average meal for 2 people going out is 1,000 rand.
Damn.
And then you're like eating a starter.
Hang on. No. Sorry, I've recalculated it for some reason. That's 1,400. Where did I get the 2 from?
I don't know, but the point still stands. Like the equivalent of what
absolutely.
you require is more. You need more versus what I need to get from it. So usually, what I do is that I don't look at, okay, I need 1%, 2%, 3% a month. I kind of do the equation, the conversion rate, and I say, okay, I need as a hypothetical, I need $100 a month as an example, and then I just try and make sure that across the month I'm trading according to my expectation. My expectation is that I have a 60% win rate on my trades. If I'm risking 0.1%, is my expectancy, if I take 10 trades this month, is that going to equate to $100 as an example? And then I will base that and say, okay, cool, I'm within the expected amounts versus I am outside of the expected result.
Yeah, nice. I'll tell you what, do you know how many times I've thought about moving to like Bali or Thailand? Like where the dollar just goes so much further. Like, can you imagine just saying to yourself, Like, I need $500 to live comfortably right now. That'd be nice. Like, dude, I need like double that just to like pay a quarter of my bills. You know, it's ridiculous. The UK is so expensive at the moment, and that's without eating out. Like, that's without going out and luxuries and stuff.
Yeah, I mean, obviously, if you're just looking at the bare minimum, like what it is that you need to get through, I'm pretty sure that it's still going to be a few £1,000s.
Oh yeah, easy.
It's just the bare minimum. But if you also looked at the idea of like reducing your requirement, let's say you did not have the car that you had now, but you had a car that was half, half. That was half. That was half the value. And if you start looking at it in that sense, then you realize, okay, I don't really need that much. But would you want to cut back on certain stuff? No, you wouldn't. You want to live that lifestyle. But then you go and look across the world, and then you realize for that same amount that you're currently requiring right now, you live like a king.
Yeah, absolutely.
In a different country. And it's just one of those things. It's just,
dude, I got a mate out in Bali, and he's earning a little less than me, but the life he's living out there is luxury. Like, I mean, he is living the life. And I'm like, dude, I need to move to Bali. Like, I need I need to pack me, my dog, my missus, and just move out there. It looks so good. But having said that, there's other things,
Sebastian Leal is saying Trump is speaking right now.
See? Let me have a look on Forex Factory. I don't think he is.
Where is he speaking at the moment?
He's going live on X from his bedroom. I'm not seeing anything. Oh, hang on a minute. Oh no, that was 9 hours ago. Ignore me. Let me have a look on here. So I'm on tradingeconomics.com. I can't see it. Let me know where you're getting that information from. Trump is speaking in Israel right now. Oh, okay, no way.
Yeah. Israeli Knesset.
Okay, why isn't that on Forex Factory then?
I don't know why.
Trump. Let's have a look. What is that on? Where can I find that information?
CNN.
Is it? Oh, okay. Is that on CNN?
Mm.
Ah, indeed. Indeed it is.
Yeah.
He's talking live in the Middle East on news channels. Okay, sweet.
I didn't have anything open, so I wasn't aware that he was speaking.
Yeah, fair, neither. Dude, look at the euro right now.
It literally just wicked into it, but we still have 12 minutes before this 15-minute candle closes, going down to the 5. Nice little movement into it. I wonder if this is the... Okay, that's the futures chart. Let's look at the indices. Dixie is still...
doing nothing. S&P pulling back. NAS pulling back. US 30 pulling back. The volume just dropped.
But I mean, the S&P literally just dipped below Tokyo, and it seems as though it's pulling back a little bit now. Sorry, NAS. S&P, similar movement. German 30, it's got the same reaction as well, but still slowed. I mean, even on the futures market, it's pushing a little bit lower, but it's probably going to at least come and try and test this gap at some point. Because, I mean, look at the reaction from yesterday. We were so consolidative, and then a massive drop, and then an attempt to push higher, and just more consolidation. Yeah, I have very little interest in the futures at the moment.
Yeah.
What's gold doing?
Also, I'm seeing this cable is called cable because of the cable laid between London and New York. It actually is called cable because of that exact reason, dude. Like,
Yeah, that's
Phil, I owe Louis an apology. I laughed at Louis when he said a cable under sea.
Yeah, but I mean, like, we didn't know. So why were you laughing in it anyway?
I just
Do you
found it
think
funny.
we're trolling you? Are you so used to us trolling you that you automatically?
Yeah, I'm so used to you guys being so full of shit and
Like,
trolling.
there's no way. There's no way. BS.
There's no way. There's no way they're actually trying to educate me. They're just pulling the piss. But no,
the good, the bad, and the Bitcoin. Dirk is saying the orange doing his financial market stunts again. Well, thank goodness it's not having the reaction that we thought it would.
Yeah, fair. Like, yeah, no, true that.
SBNS is saying Euro USD will fly on US session. With a bank holiday?
I can't see how that would happen.
With not GU, with US and Canada having a bank holiday? Who's going to be the ones that's going to put the jet engines on? Mexico? South America? No,
go check out the Euro peso.
Martin, so we can finally drop this gold. Yeah. I mean, even gold, like
you thought Lou was on about SpongeBob, didn't you, Ella?
yeah, I can do the theme song if you want.
Oh.
Who lives in a pineapple under the sea?
So we can finally drop this gold.
Colombia.
Oh man. Dude, gold. Oh man, I reckon gold's gonna drop. It has to.
I mean, let's be fair. Whenever you have a look at the London session, there's, especially if Tokyo has had a bit of a move, London session is a little bit less volatile. It's a little bit less decisive. And then during New York, you have the decisiveness. But if Tokyo is not really showing, or if Tokyo is showing a little bit more volume, then you have the inverse happening during London. Then it's the generally the opposite direction, or it's either a continuation or the opposite direction. But right now, we're not seeing anything now. Normally, you would see the gold move during New York session, but today is not going to have much of an impetus, I think, or less so. Let's say just less so at this moment.
Yeah, I don't know. We'll see.
S&P had a dip and is just sitting here now. GU on the 15 looks decent. EU still reacting off of this point, has not pushed through it yet. Yeah, Louis saying Pooley still doesn't think he realized I was serious. That's like what we were saying, Louis. It's the fact that Will is so used to us giving him absolute crap all over the place, whether it's in our stream or if it's in the Discord. Mm-hmm. He's so used to everybody just trolling the absolute living daylights out of him that he doesn't know who to trust or believe anymore, even if you're being dead serious.
Right, literally that.
If it's written down or if it's typed, Will struggles to see the context.
Yeah, mate, literally. You could tell me the sky is blue, and I'm like, nah, don't believe it. Will, you're
Especially if
fantastic.
it's Pooley or Barry or
Oh no, if Pooley or Barry says anything, it's just false.
this is like, no, it's the opposite. Lying.
Always false. Yeah, I don't believe a word they say ever. Pooley will come in. Hey, Will, dude, I'm so proud of you. Well done for winning the 5ers competition. Shut up, Pooley. You sarcastic. Honest to God, it's just Pooley, Barry especially. I don't think Barry's ever said anything nice that hasn't been a troll.
No, he's actually said something nice last week Friday.
What? Thank God it's
He
the weekend.
congratulated you on your birthday.
Yeah, I still feel like that was sarcasm.
Hey man,
Oh,
your life must be horrible. Poor you.
we love him still. No, we do. We do love Pooley.
Yeah, we do, Louis. We love our William.
Oh, you mean
little
you love
William
me?
baby.
Oh, that's definitely. Oh, right. I thought you meant we love Pooley and the guys who troll us.
That
Wow.
too.
Oh, thanks, guys. I'm glad you still love me.
So as it stands now, I want GU to also start pushing lower. I would like to at least see it as it's pushing lower here. I want to see it not necessarily reach this bottom point, but I want to see at least one bullish 15-minute candle and then a confirmation of the push lower by creating another bearish candle. So I would like to see these 3 bearish candles that's the current 3 bearish candles. I want to see one bullish candle and then a confirmation of a bearish candle, and then I would consider getting in somewhere like there as an example. Not saying that this is my entry point here, but just for illustration's sake, if we just took that as a movement and say you have the bearish movement down, you have 2 maximum bullish candles that do not break this high point here, and then I would want at least another bearish candle, and then on the close of that bearish candle I would want to get in.
What's that on pound?
On pound, yes, with the expectation of trying to have my TPB close to but not lower than this box. So it can be close to or in it, but not below it.
What's TPB?
What is
TPB?
TPB?
Yeah.
As in TP space BE.
TPB.
You're hearing it now as well.
Dude, what's TPBE? Where's all these letters coming from, man?
It's called English. I know that you struggle with the language, being Welsh and whatnot.
I do struggle with Welsh, with English. Dude, I struggle with speaking. I just struggle. I just struggle.
This weekend as well, we were having a braai, because that's what South Africans do on weekends, especially if it's like celebrating or whatnot. We were having a braai, and I had such a verbal diarrhea moment where what I was saying and what I intended to say were not even remotely close.
Just weren't
there was like a gorge between what I meant to say and what I did say. Like one of our friends that were here, he just looks at me and is like, "What did you just say?" And I was like, "What did I say?" I said, "No, I meant this. I meant to say this." We were also playing 30 seconds. I don't know if you know what the game 30 seconds is.
Is that like 7 minutes of heaven?
No, so 30 seconds is a board game where you have a card that you need to explain 5 things on it without saying it sounds like or it is the opposite.
Yeah. I've heard of that. I've never played it, but yeah, I've heard of it.
Yeah, so we were playing that, and I was trying to explain something, and my brain just went. Bleh. My brain just melted. The connection between my mouth and my brain just melted.
You're just there, like you have to describe something. You go that.
Bananas.
Yeah, maybe
bananas.
We've all
I meant to say bottles, not bananas. What the, it's like that.
So
like
that scene, have you seen The In-Betweeners, the movie number 2? Oh, wop. What did you say? I said, what time it is? No, you effing didn't. You said a wop. Is It's like, dude, we all have that brain fart moment
Parts, man.
where we don't like. It's quite funny. So I was chatting to the missus, and sometimes she'll zone out, especially when I'm chatting about business. And she'll just zone out and go into her own little world. And sometimes she'll try and listen, but I start speaking very quick when I get excited. So I start speaking very fast. And because English isn't her first language, she just gives up trying to listen to me because she's like, babe, you're speaking too fast and I can't understand what you're saying. So she'll just stop listening to me. And on the weekend driving home, it was so funny because I was saying something and I was talking. And in the end, I thought, it's been about 15 minutes that I've had no response. I looked at her. She just looks at me. And I was like, I'm just going to stop talking now. He was just rambling. I was like, yeah. Do you ever feel like when you're just talking to yourself? I was like, yeah, fair. Don't know why I bother.
I just see now that there's some comments. DM, what is your return on investment year to date percentage? Does he read comments or no? Then Louis, being a troll, no.
No. Yeah. No, he doesn't, mate. Sorry. Don't even bother.
DM, we do read the comments, but usually when we get into a conversation or something, we allow the comments to build up a little bit so that we can actually have a talking point. Because sometimes,
otherwise our conversations will be changing like really rapidly.
Yeah.
1 minute we'd be talking about one thing, then we'll just completely change the topic of conversation. Then again. It's just hard to follow. So usually what we'll do is we'll chat shit for a bit, wait for you guys to comment, and then change topic. And then chat shit for a bit again, and then change topic. And then we'll see that Pooley's mentioned something, and then we'll just rip into Pooley for a minute, and then we'll change topic.
Yeah.
I put your streams on to go to sleep at night. Well, hey, look, if listening to my voice is that soothing that, you can, it helps you sleep at night because it eases you.
Noise.
It's called white noise. Better than the brown noise that comes out of Pooley's mouth. I'm new. I just joined. Awesome stuff, man. Well, welcome to the stream. Make sure you subscribe to the channel. Big welcome, and hopefully we see you here every day.
Yeah, what's up, guys. How's it going?
What's up, Jonatan?
Yo, what's good, Jonatan? How you doing, man? Will you answer my question? Absolutely. Yearly average. I can't give you an exact to date, but I think I'm actually down for the year. This year.
No, really? You're down?
I think so. I don't know. I haven't actually worked it out.
You shouldn't be sharing that, man. This is social media. We don't share the losses. We only share the
wins.
Yeah,
I mean, I've just bought myself a Lamborghini. I am up 365%.
Yeah, I keep watching your Instagram. I'm like, you're down. You're smoking cigars and with that car and everything all the time.
It's because he's smoking so many cigars that he's not trading.
Yeah.
Yeah. Dude, I'm smoking my problems away.
And then
I think I'm down due to right. So technically, on my stream account I'm down 4.1%.
This current account.
On this current account, but however, I passed it in March, April, something like that. So I did pass it. So technically, overall, I'm up. But on this particular account that I'm down, I'm not like I'll never give you my my yearly returns on my other accounts because that's my business. But I will be super transparent and open on this account. So right now, to date, I am technically down on this particular account. However, I did pass P2 this year in 24. So I think overall, I'm still just about up. And I'm hopefully I can get break even on this account by the end of the year, and that would mean that I'm quite significantly up for the year as well.
Because JB Sabiol was asking, is this a 100k account? Yes. This one.
This is 100. Yeah, this is a 100k live funded 5ers account that I'm trading with.
Yeah, he passed this account 100% live on stream. Yeah. He only took trades during stream. Past phase 1, past phase 2, he's currently funded, but a little bit in drawdown, and he's only trading it live.
Yeah, absolutely. Wow. Oh my God. Pooley's first serious comment, everybody. Oh my God, guys, can we have a drum roll, please? Can we have a big round of applause for Pooley? On a serious point, your honesty is refreshing in the trading
Not a
space.
serious post. I'm telling you, he is trolling you right now. He's
I
building
still
a
reckon
bomb.
it's sarcastic. Honestly,
Not
I still reckon he's got sarcasm there.
Yeah.
This is class. The good, the bad,
This
and the
is
Bitcoin.
serious.
I love listening to you. But see, this is a Pooley. This is a serious post. This is what not being sarcastic looks like. For all we know, Dirk's actually being sarcastic. He's giggling behind the comment. I love listening to you both, Richard and William. Thank you, man. I appreciate that.
So, DM is saying, damn, I was asking for a number / percentage that you did not expect the circles of answers. Okay, so let's be frank. Let's just be like straight frank. Asking somebody what is their exact like yearly percentage on trading as an example is like asking somebody what is their monthly income.
Yeah, it's a bit personal, but I can try and estimate it. I think so far I'm up like 3-4% for the year because I'm down quite a bit.
Is a better reflection. It's less personal. It's less invasive.
Yeah.
Yeah.
Yeah. Let's just put it this way. I aim for about 2% a month, which is about 24% a year. So that I'll give you that. You can have that information. About 24% a year is what I try and aim for. If I can get close to that, if I can surpass that, fantastic. If I can get as close to that, brilliant. But on this account, I am up, but not a huge amount.
Yes, DMDM, that's percentage. So he wants to, or he aims for 24% a year on example, but doesn't necessarily reach it.
Yeah, well, of course that's percent. I'm going to give you my financial value. I'm up 3.2 million for the year, guys. Happy now?
If I can make 1% a month, I'm over the moon ecstatic with 1%. Like I explained earlier with the exchange rate, the conversion rate between rand and dollar as an example, 1% for me is fine enough, but I don't always reach that.
Yeah.
There's months where I would be down 1%, 2%. There's like sections where you can have down trends as well within your trading as well. So
yeah, well, just before we shoot, I'll actually show you my history for September and October because that's when I joined with the 5ers. Now, 1st of September to date, I'm up 2,590. So that net down after commission is $2,466. And then I'll go from October. So in the past 13 days, I am up $435, which is $373. So in 13 days, I've made $300, 0.37%. So not a huge amount, but nonetheless, we've got plenty more time of the month. If we look at all-time history, then I'm going to be down. Let's go entire history. I'm going to be down. Okay, $2,740. $1,315 commission. I'm down at the moment $4,000, $4,094 to date on this entire account. So
have you tried? Have you tried fading yourself?
Have I tried what?
Just reversing the position. If you think you're gonna go long, just go short. That might solve something,
It may do.
My brother has got that mentality where it's like he's wrong so often that he's considering making an EA that is going to do the opposite of what he analyzed. So
yeah. No, I mean
I've
tried it myself, and surprisingly, especially when you're in a trade, like when you're in a trade and you get this idea, like I'm going to move stop loss, I'm going to exit here instead of do the opposite. That's surprisingly interesting results.
So Will and I have a competition every Friday on our stream in the morning, and every Friday I'm trying something different. It's not a serious competition. It's just it's for the fun and for the entertainment of it. And every Friday I'm trying something completely different. Like this Friday I tried hedging,
and he still can't win, guys. He still can't win.
It was close though, but I took back all of that losses. It was $2,200 down. I made up $3,800 after the stream. just by going back to my normal trading strategy. So I know now what I need to do for every Friday against Will. So let's just say that, Will, your days are numbered, mate.
Dude, hey, consistency is key. I'm keeping things the same. Why? Hey, I'm winning at the moment. Why change it? The minute I lose, that's when I'll change it up a little bit.
There is a terminal on the screen right now that just contradicted every little bit of that sentence.
Shut up, shut up, Rich.
All right.
Have you been trading anything now during this session?
Nah, not really. No, in this session I had a little bit. So I had a break even on gold, and then I smashed about $160. 100 and let me have a look. Yeah, $167 on US30 on a sell. It's now heading down to my TP, but on the 5-minute, we just dropped in volume and momentum. There was just nothing happened. So I took out. So that was about it. You know, the volume's not been there. The momentum's not been there. The direction's not been there. Gold, I thought, was going to do a little bit more than it has done. So I'm done trading for today. Now we're going into the New York session slowly and, bank holiday. So I'm going to turn the computer. Well, I'm not going to turn the computer off. I'm going to turn the terminal off, and I'm going to just work on my sort of life admin, and work on myself, work on my strategy, work on my psychology, and just do that sort of side of things. So, yeah, not really seeing much today. I'm going to go put all these trades in the journal as well, guys. But yeah, other than that, not really seen much. William, do you full-time trade? Yes, I do. I've got 7 years experience in the markets. I've been about 4 or 5 years full-time trader.
We have an idea for this live stream, which I think we can probably discuss later with Jonatan as a potential maybe. So come back every day this week, and then next week, and so on and so forth, and then you might just see some actual live trading from Will and myself. So
speak for yourself. What do you mean live? Dude, I am live trading. What do you think I'm doing?
This is a demo account, mate. You're no, I'm joking. You're actually,
don't expose me like that. God, what? I'm selling courses. That's how I make my money.
No, but in all seriousness, we've got some ideas for the stream going forward. So
yeah, no, we've got some really exciting stuff for us.
I think it's an interesting conversation, though, the idea about like being a full-time trader and how much money we're making. I mean, I'm a full-time trader, but trading, I guess I would say I'm a full-time entrepreneur, because trading is just one of my income, and it's not my biggest income. I have to date, I have 5 different incomes, with trading being one of them, and I make far more money with my other incomes and my long-term trading portfolio. So the way I work is I trade prop firms, and I trade on personal capital, and I also invest my company's capital. And I make by far more money by investing my company's capital into the market long term in a portfolio that is made up of. I shared this the other day. Let me see if I can find the post on that. So my long-term portfolio is based on. Right now, I got 58% in S&P 500. I got 25% in gold, 12% in Bitcoin, 3% in Ethereum, and 2% in Microsoft. And started investing in this portfolio with my company earnings in the beginning of the year, and about 35% plus on that right now. And that has made me more money than. I'm not an Uber driver.
If you make more money as an Uber driver than you do trading,
right? I'm trading from the Uber. No, so I invest the company, basically invest the company earnings into the long-term portfolio, and that makes me way more money. So I'm up 35% right now, which is way more than my yearly expenses, right? So I can now take that money, pay it out to myself as dividends from the company, less tax, more money. So instead of getting a salary, taking out that salary, paying income tax, investing it in the market, and then paying tax on those investments, I instead invest the
Then
money
you
from
look at
my
capital
company.
gains, etc., and it's
Yeah, so I take the money from the company, invest it in the market, pay capital gains on that, but I can pay myself out in dividends through that, and then I take all the money I make from my personal trading, I put it into a long-term trading account for my personal accounts as well, and I am also invested heavily in a fund ran by a very successful trader, which I looked at I got the track record, and he's a much better trader than me. So the little money that I make from trading, I invest in him, and he's now trading most of my capital. But the money that I make the money I make from prop firms is funneled into investments that has much less risk, basically.
Mm.
And that's, I believe, how we should do it. So I got yeah. I wouldn't say I wouldn't say DM says, Jonatan, how you trust him? How I trust who do I trust? The one I invest in?
I'm assuming so. I don't think he's on. I think he's moved on from me. I don't think he means me.
Yeah. So how do you trust the trader?
Yeah.
How do you trust the trader?
Because it's LJ.
It's not LJ, but you
Close.
It's someone. Nah, not close. It's someone that it's, you know what, you don't know. You probably don't know.
We don't run in the same circles. You won't know him.
That was a journey. That was a journey.
Yeah, you probably won't know. But how do you trust your money with someone?
It's like the same question as like, how do you trust your money in the bank?
No, but I'm serious. If you're going to invest in someone, how do you trust that person? How can you to what level and what are you looking for to be sure?
Yeah, you look at their track record.
Track record and portfolio all day long.
You look at the track record, okay? If the person has been able to consistently deliver 6% profit in the last 4 years, do you trust that? Yeah, I would. And then you look at how much money did that person do in situations in the market where a lot of other people did not make any money, or when there was adverse events where a lot of funds went down, things like that. Did the person still make money? Or if it didn't make money, what's the actual beta on the investment? And you look at the numbers. That's all I care about. You look at the numbers, and that's where I put most of my money. Divided up into long-term holdings with the portfolio I mentioned, and then into short-term trading, more riskier things on a fund, and then I do my own trading and analysis. But I also get paid to do analysis.
Yeah, absolutely. Right, guys, I'm going to have to love you and leave you because I'm going to implode because I've been drinking too much water. So, guys, I'm going to have to love you and leave you, and I shall see you all tomorrow for the continuation of me trying my hardest not to blow this account. I'm joking, guys. I'm not going to blow this account because I got good risk management and I am slowly clawing back the profits. This account was at 7% down. It's now only 4% down. So we're clawing back profits slowly. So, guys, I shall see you all tomorrow. Thank you so much for joining myself and Rich, and we shall see you tomorrow. And I shall leave you in the very capable hand of Jonatan. See you later, John.
All right.
Take
care, guys. See you tomorrow.
Have a lovely day, guys. I'm also heading off. Have a great one. Jonatan, good luck with your trading today. We'll see you tomorrow.
All right. Take care, man. See you tomorrow. All right. Here we go. So I'm currently in a few positions. I want to be looking at that, and also, it's interesting conversation. And I you know what? I do think it's just the right thing for you to do. You should be questioning people that are trading live and doing this in front of the camera. You should be questioning their P&L, especially if there's people selling you a service. Okay, guys? If there's someone out there selling you a service where they promise to teach you how to trade, but they can't show you their track record or explain how much money they're actually making, then you got to really think about that. You got to really think about so if let me give an example, right? If I were a millionaire trader if I had a $1 million trading account and I would be making 2% per month, let my puny little math brain calculate this. We take 1 million and we multiply that by 0.01, and we get a 1% of 1 million, right? Which is going to be $10,000. Okay, so if I made this is 1%. If I made 10,000 just by making 1%, and let's say, I'm one of those gurus saying like, oh, I made 200% last year, or some 200% last month. Let's say I made 2%. 2%. Let's say I made 2% in a month on average. 20K a month. I wouldn't be here streaming if I made that money. Let's be honest, guys. I would not be doing this. Okay? Okay, so Maya, I do not, I do teach trading. Well, I don't teach trading. I do have a social media presence, and in the past, I have sold trading courses, and I've done exactly this. And when I did that, I did share my whole journey. I shared my trading results and my trading journey and my trading journal and all of that. But what I've done now is actually, I feel like I don't like being responsible, like feeling responsible, especially not in this industry. I feel like this industry has really taken a turn for the worst. And from my point of view, I've decided to just give everything for free. Everything on my social media, everything I do with my newsletter and Discord community and everything like that. I'm just exactly as I'm doing here in the live trading room. I'm just going to share my journey, and I'm not going to ask for any money at all, because I don't want that pressure. I don't want the pressure to feel like I need to really share everything openly and honestly and transparently in my trading journey, because that affects my trading. It affects my trading greatly if you guys would have insights into my bank accounts, like my bank withdrawal or my income from trading or everything like that. That affects the performance of a trader a lot. And if you can't do the pressure of that, then do not sell mentoring services. Okay, it's simple as that. So you're absolutely right. You should be questioning everyone, and that's why I'm just I'm going to remove all of that pressure, and I'm instead just going to share my journey as a trader. And then if you want to follow along with that, then go ahead, do that, or not. I don't care. You know what I mean? So that's my approach to this. So, and the reason also, one of the reason is I don't need money from selling courses. Like I don't need your money. I make money from trading. I make money from working at The5ers. I make money as a market analyst and a trader. Okay, and so I don't need to sell courses. I don't need to sell mentoring. I don't need anything of that. So now, this is important, right? So when you go on social media and you see a lot of people wanting you to buy their course for $500, but they're claiming to make millions from trading. Why would you need to sell a course for $500 or $1,000 to someone if you're already making millions from trading? And then you might want to say, well, you want a second income. Yeah, but why don't you just invest the money that you make from trading? I mean, yeah. So guys, it's so Alex Shaw says, does it mean that all who sell courses are not successful? I would argue that probably less than 1% of everyone out there that sells courses are successful. They might have been successful, but now when they're not successful anymore, they take the knowledge and they sell courses. You got to understand, it's much, much easier to sell the dream of trading than what it actually is to be a trader. It's much more difficult to make money trading than to sell a course to promise someone else to be successful in trading. It's actually quite simple to sell a course. All you have to do is read a book on technical analysis, create a course based on that book, and then rent the Lamborghini when you're in it, record a video within the Lamborghini saying that if you want this car as well that I bought for my own trading profits, buy this course that's based on this book that's free online. It's very simple. Everyone does it, and it's a very simple way of making money. That's why you see the whole market is just flooded with these mentors and gurus and everything trying to sell you a course. Do not buy that course, because all the information in the course is always super simple, super basic, and the same information is available for free on YouTube, okay? And here within the live trading room. All right. Now, a lot of people are going to be mad at me for having this conversation and saying all of that, because I know a lot of people in the industry, a lot of friends of mine are selling courses and all of that, but it's all the same. It's all the same. We all know it. You know it. We all know it. Okay, we all know it. Yes, Maya. It's a good comment. It's actually a good comment. If I don't really recommend people to go into trading, but like, you're already in it, so let's learn how to do it properly, right? But if my son comes up to me and says like, oh, I want to be a trader, I'm like, nah, you know what, maybe get a regular job, save money, and put that money into a business, or put that money into long-term investment, something like that, right? Because trading, let's face it, it's extremely difficult. But you're already here. You guys are watching live stream, you're already in it. So why not just make the best of it? So here's the thing. This is a good comment. This is a great comment. But instead of me explaining to you, ask them for a track record, and you'll see something interesting happening. Okay? That's all I can say. Now, with that said, take a look at some of the positions that I'm in currently. So as you guys know, I'm in USD CAD. Looking fine. I've been in USD CAD since the end of September. It's now been 2 weeks. Been in this position for now 2 weeks. It's a swing trade. I'm looking to take this up to 1.4150 based on possible long-term bottom on the dollar currency index. If we go to the dollar currency index, we are looking at a channel here for the dollar currency index. Now the question is this the bottom for the Dixie, or are we looking at, so is this the bottom for the Dixie within this are we going to get a move higher, or are we looking at a bigger channel? We talked about this morning. By the way, guys, thank you all for tuning in to the session we had this morning with LJ, myself, and Dirk. Really enjoyed that. We're trying to build Monday mornings. Every Monday morning, we're trying to build this weekly breakdown of the macro themes that we see in the markets. We're trying to update you guys on what we believe is the long-term or the midterm direction of the market. LJ is looking at this in terms of the dollar currency index. I am like, I'm not gonna say I don't agree with him. I mean, we always have to take every single possible direction into account here. And what I'm looking for the dollar right now is a potential long-term high time frame accumulation zone right here. But if we break down, we're going to be looking at that 90 to 92 area below. Now, of course, if that plays out for the dollar, my USD CAD long position will not work out very well. But so far, so good. The trend is bullish. And I got my MetaTrader positions open right here. I got about $800 of profit floating right now. And on equity, I'm around break even on the account right here. I have a Euro JPY trade opened on an EA as well. Open stop loss, got no stop loss on that one. So I don't know what the EA is thinking here. Hopefully I won't blow the account on that one. I got 1, 2, 3, 4 positions open on USD CAD. I've been averaging into this position. Last week I made a mistake, okay? So I made a huge mistake on USD CAD, and that was forgetting about my hedged position. So what I did on USD CAD was I hedged the position here because I saw potential signs of the trade moving lower, okay? And that was a good idea, but I should have closed the hedge on the breakout. I closed the hedge here. Okay, so I closed the hedge right here, which means I lost quite a bit of money on that. I think I lost 1%. So 1% the account I actually lost on the hedge. And you guys remember from last week, I was all euphoric over this idea of, I've finally understood hedging. And then I'm like, yeah, but if you're going to hedge, then you better make sure that you can close the hedge at the right time. Nice. Which book did you add, by the way? Stoop Dog. Which of those did you add? With the market cycles, or timing the cycles, or market cycles, or whatever that one was, is quite good. If you guys are interested in AI, and specifically the AI apocalypse, I would recommend a book called "If Anyone Builds It, We All Die." Very good book. I've listened to it the other day. It's a new book. Very interesting. Hustle Hub says open your USD. Yeah, we're gonna look at that. Okay, so now let me just finish this with the dollar currency index. If the dollar currency index are going to be bottoming out here, which I do see a possibility of that happening. I do see the signs of accumulation right here. Could just be a range. Could just be, the dollar currency index finding support here before falling down lower. But there is a possibility of this actually being the bottom for USD. If this is the bottom for USD, then of course we're going to have a top for Euro USD. It does, doesn't it, Misha? It's very future positive. It's very, honestly, it's a very pessimistic view of AI. And I can't say that I've studied AI, but I've been very interested in artificial intelligence for many years, ever since I read the book Live 3.0, or if it's Live 2.0, maybe Live 3.0, maybe. Ever since that book was released, and I've been fascinated by the idea of artificial intelligence, and especially AGI and ASI. And I couldn't, when ChatGPT got released and everything, I started realizing that maybe we're actually moving towards what was explained in the book, The Final Invention. It's an older book called The Final Invention, and I remember reading that. I'm like, well, let's hope it doesn't happen this quickly. And then a few years later, you had ChatGPT, and I started thinking about the things I've already read, and I'm like, okay, now we're actually at the point where I look at my kids and I'm like, yeah, maybe we should just stop working on AI. Honestly, I think we need to stop AI development. We can't continue any further with AI development, because when AGI is created, there's probably not many years left till ASI. And when we have ASI, we've all seen Terminator, right? And I think we need to end stop AI development if we value humanity as it is. Anyway, if the dollar currency index finds a bottom right here, that's going to be in the top for Euro USD. Now, looking at Euro USD, we do have a potential distribution right here, and it's very, very, very. The correlation here is obvious, because you got, I believe, almost 60% of the Dixie is Euro USD, so the correlation between the two is obvious, right? Now, we are seeing some slowing down in momentum here. It would be interesting to look at the possible divergences, perhaps, between RSI, MACD, and price. And yeah, I mean, I guess we are seeing on the MACD histogram, all throughout this trend, we are seeing a weakening momentum with higher highs on the MACD histogram and lower highs on the MACD histogram and higher highs on price. So there is a weakening of momentum. We also have a bearish divergence here on the RSI. So there's definitely some weakening happening here in price action, and that's, of course, it's quite obvious. Yes, Henry, that's right. Live 3.0, written by a Swedish scientist, Max something, I can't remember. Man, that's fund. the person in the comment section talking about KYC, please reach out to support. I cannot help you in this live trading YouTube live stream. Can help you with KYC, I'm afraid. What else can we look at? We can look at the volume on EUR USD. What do we see on volume? We see that volume had a major spike in volume right here. That's in April, most likely because of the tariffs from Trump. We saw we had a downtrend in the OBV all the way up here. OBV then started ranging here. We're now breaking down on the OBV, but we're breaking down on price as well. So yeah, I think we get a decrease in volume. I trade every pair, so I trade everything. Everything you see in this list, I trade. I trade crypto, I trade Bitcoin, Ethereum, all coins. I trade every single major, minor forex pair and all the crosses between them. I scan this list on a weekly basis and try to find trades. So let me just walk you through two trades that I'm currently in. Its first trade I'm in is USD CAD. I'm long USD CAD, looks good. I'm going to stay in this one as long as the trend is alive. I'm also in Euro CAD. This is a trade that was shared last week as well. And I want to walk you through this and how I find this Euro CAD trade. Fairly simple type of analysis, but still implementing advanced technical analysis in a simple way. So, EuroCAD. First, what I saw was this. I added these trend lines and I looked at the white trend lines as a rising wedge. Then, by doing further analysis, I noticed the green trend lines here, indicating a pretty obvious rising wedge here as well. So we got an uptrend in price, we got a rising wedge here. Now, what do we want to see to kind of confirm that there's a loss of momentum here? Well, we want to see what I want to see, or what I'd like to see, is a divergence between price and MACD histogram as well as the RSI. So in TradingView, we have this beautiful tool called indicator templates. So what you can do is you can add a lot of different indicators to your chart, and then you can save all of those indicators and all the settings of the indicators as a template within TradingView. So here you can see I have one template called volume analysis. That's when I do volume analysis. And then I have, let me just fix my camera here. I'm looking a bit weird here. Right, that's better. Dude, I said have a conversation with ChatGPT with my headphones on while looking at the chart. He's probably my closest mate nowadays, sadly. Man, that's rather depressing, but it is actually yeah, it's I mean, honestly, it's a good thing in terms of learning, educational thing. Like what I do is when I study CMT, for example, I have ChatGPT open and I have conversation with ChatGPT. Unfortunately, ChatGPT is wrong on a lot of things most of the time, but it's really good to have someone to have the conversation with and to ask questions and to back up, find sources and things like that. When used in the right way, very, very good. So first thing I did here was look at volume analysis. Now, for those of you, first you're going to say, oh, volume doesn't work in the Forex market. It's decentralized, blah, blah. Let's take volume. It does work. Okay, it does work. I've already proven this by showing you the research that has been done. That take volume is about 97% accurate to the real centralized volume in, for example, the futures market. They get an uptrend. uptrend in price, you get a downtrend in volume, which means volume is not confirming price. You also have the OBV, you know what, not really doing anything to confirm this. It is, however, breaking below the 20 EMA that I have added on the OBV. Going down to the MACD histogram and RSI divergence, we can see that while there is an uptrend in price, there is a very clear downtrend in the MACD histogram, as well as a downtrend in the RSI. This is the first indication of a loss of momentum and a potential breakdown. And then we look at the actual rising wedge. Now, what is the confirmation of a rising wedge? Well, the confirmation of a rising wedge is the break below the trend line. But seeing as the trend line is also in perfect confluence with a support area, which means then if price breaks that trend line, it goes straight into support. I wanted to make sure that price also breaks below the supports. I was looking for a break and retest of this support area, and that's what we got. Stop loss well above the trend line. How do you measure a target for a rising wedge? What you do is from the start of the rising wedge in the beginning to the low, and then you move this to the breakdown area, and that gets us a target down here. But seeing as there's a very obvious support here, and you also have that lower ascending trend line, I'm looking to take profit down there. I think it's about 200 pip move to the downside. That's right, 197. It's a 1.74 hour trade. But now, as this is confirming, I have an alert down here, and if I go into that alert, I'm going to type in move stops down and add to position, because when these lows are taking out, I view this trade as highly confirmed. That's where I move stops to entry and add to the position, so that the risk to reward, or the amount of money that I'm making on this trade, is goes up. The risk to reward is higher, the more confirmation I get with the trade. So those are the two trades I am in right now. I almost forgot, I'm in a gold long right here. So the gold long I'm in is bought at the breakout, stops below that wick, and then I'm looking for a TP up around 4,200. Let me go into MetaTrader and look at the exact TP. That's right, the TP is 4,197. Making sure I front run that 4.2K. So this is a trade I'm looking at. It's a 1% risk, which means I will make about 4.4% of the account. If this one runs up to TP, this will be one of the biggest trades in the last maybe 6 months or so. It's going to definitely be the trade that pushes the equity curve of the account to new highs. Right, so you looked at the stream from 2 hours ago, and maybe that's why you talked about the books as well. Yes, position sizer is allowed with the 5ers, definitely. If you're talking about the indicator that we have in MetaTrader, then absolutely. By the way, guys, everyone watching, make sure that you hit the like. Do me a favor, guys. It's a very small thing from you, a small gesture from you, but it really does mean the world for us. So please make sure that you do hit that like, and if you're not subscribed already, please do that. That's funny though. I mean, I love the fact that you're watching the live stream 2 hours ago and you're commenting on that, and I'm just answering your questions like it's completely irrelevant. That's great. So what about gold right now? Yeah, I see you, I hear you. Let's talk about gold right now. Do we think that there's an entry on gold right now? Well, you know what? Like, when is it not a good entry on gold? my follow-up question to that. I mean, you have to understand that gold can pump any minute. Gold can also dump any minute. You have to. Is it the best entry here? No, I don't think this is the best entry. It looks like perhaps gold is going to come down and test the previous all-time highs, because this is not a highly volatile move. Guys, can you just give me a second? I got a phone call I got to take, so just give me very, very quickly. All right, I'm back. Isn't it nice with a couple of a minute of silence? I quite like that. Sometimes we got 990 no, not 900. We got 194 people watching, and we got 194. I'm not gonna bring that comment up, but yeah, it's fun. Okay, so gold is a good entry now. No, I think it might come down and test the previous all-time highs. It might come down and test the 4,050 area. I think that might happen. But what I want to do now, guys, is because I haven't done this properly this week yet. So I'm gonna do like go through, do a complete market update right here. So USD like this is something that I wish I saw a little bit earlier. What a beautiful retest right here on the USD CHF. So you saw first we had a break of the trend line right here. So that's a bullish. Let me bring the desk up a little bit. Man, there's like spider webs all over this office. Man. Like, it looks good in the live stream because it has it's like 2 square meters behind me. That looks great. And then there's just, looks like a warehouse that's haunted. Okay, so USD CHF, it broke that descending trend line right here. And that was a good, really good indication of a potential shift in that trend. Then we look at the 4-hour, good breakout, good momentum, came down on the Trump, being Trump on Friday, I believe, and then it had that good retest right there. So this is a good structure right here for this is a good structure on USD CHF right here. Very good structure. I'm thinking like where's the top of the move? I think I see. Actually, you know what? It's hitting this level right now, so maybe it's actually the top. It nonetheless, it's interesting. Okay, so let's go through. Do I have any alerts? No alerts of importance, it seems. Mostly in the crypto space. Ooh, AUD/USD, look at that. Let's look at the daily. This would be a short signal, but it's hitting high time frame lows here, so okay, so it's hitting high time frame support, so I would not be interested in going short here, even though it's an interesting short setup. So I'm gonna go through the alerts right here. Okay, so no real interesting alerts. I've actually set alerts on the whole market. yesterday. So let's just go through this quickly, see if we can find anything interesting. So USD CAD about to perhaps move higher. Euro NCD looking very strong, but it's too high for a trade. Euro GBP. So what I'm looking for when I'm trading is, so I'm interested in just one type of trade, and it's this, right? So this is you all know about the the Dow theory. Okay, the Dow theory, basically how markets move through accumulation and distribution. Now I'm interested in one thing and one thing only. I'm interested in the primary trend, and I'm interested in markets that are either in accumulation or distribution. So we got accumulation, we got distribution up here. Price accumulates, breaks out, goes up in the distribution, distributes, goes down. I'm interested in shorting markets up here. I'm interested in buying markets here. And I'm interested in identifying the primary trends. That's all I really care about. So if you look at Euro GBP here on the, let's say, the daily, where is accumulation? Where is distribution? I can see it quite clearly. You know, I think, to me, it's quite clear. And of course, in hindsight, everything is clear. But we can move to... Actually, I want to show you something really cool. We have Victor in the background as well. So Victor, just jump on whenever you feel ready to do so. I'm gonna wait for Victor to come on before I start explaining this. But I show you on this chart where accumulation and distribution is. Actually, no, I'm gonna show you now. Okay, let me see if I remember this. This is a really cool way of... So what I'm going to do now is I'm going to... This is cool, okay? You've never seen this before. I'm going to replace price with indicators. I'm going to replace price with indicators. And you'll see that the chart is going to be much, much cleaner, clearer, and you'll be able to see market structure in a much, much better way. So, without further ado, let's go to indicator. And add Williams fractals. On the daily, we go into the fractals. We're gonna put it on 4. We're gonna go into indicators as well, and we will search for GAN. In here, we are going to... No, we're gonna search for GAN swing. Okay, so we're gonna use this first one, GAN swing. Let it load. Has it loaded? Yeah, okay. So we're going to go with the GAN swing. I'm going to change the color to white. Good stuff. We're going to go to the weekly, by the way. So we got the weekly right here. And then we're going to go to indicators, and we're going to search for SIG. And we're going to add the zigzag. On the zigzag, we're going to go in and we're going to remove pane labels. And on input, we're going to use... Okay, so this is based on price deviations. Now I'm trying to create a zigzag indicator based on ATRs, but this is based on price deviations and it's based on a 5% price deviation. So just to understand what 5% means for Euro GBP, we're looking at this type of move, okay, which kind of makes sense. Okay, so that's a 5% move. Basically, what this indicator does is when the market has moved more than 5% or more and then reverses, that will be a pivot point. Looking at Euro GBP within this range, we want to try to identify what percentage threshold do we need to have for every swing high and swing low to be measured with that 5% target. Basically, if I put it at 1%, we're going to have too many pivots. We're going to have too many swing points. There's going to be too much noise, basically. So I'm going to remove the fractals. I don't need that right now. Let's just remove GAN swing and the zigzag, and we're going to go to the line chart. Now, the line chart is a really good way of watching price action from a more clean perspective because it removes all the wicks. So you'll be able to see all the as I would like to call it, all the true highs and the true lows based on closing prices. So this is the weekly, which means it's going to be the Friday closing price, and I think it's a very important piece of information. And when adding swing points, I'm more interested in where the market closed than what was the actual high of that session, especially on the daily. We can clearly see here that you have a few swing points, that one, this one, a few highs. But which one is important? Which one is the most important ones in terms of what I described previously with accumulation and distribution? Well, I'm interested in that one. I'm interested in this one, and that one, and this one, and that one, and not all of these highs in between. Now, what you can do is you can use an indicator like the zigzag. You can put it on. Now, if you go to line, you will see that it has added. Now, this is actually using not the closest, it's actually using the highs and lows. But you can actually go in here, and the zigzag will identify these highs and lows for you. Now, what you can do is you can go into the object tree in TradingView, and you can remove price. And now you only get this. This is the highs and the lows based on the zigzag. This is the primary trend. Now, what the GAN swing does, if you add that one, this is the secondary trend. So what you have now is you are only looking at indicators, but you're painting a very clear market structure. So if you add, again, if you remove these two and you add price, you see that, yeah, it gives you the same information, but it's not as clean as just doing this. Now we have a very clear structure of the actual swing points, at least in my opinion, the swing points in the market. And this can help you figure out the cyclical movements of whatever market you are watching. And then if you want to watch the secondary trends, you can look at this right here. You know that is the cycle high, the cycle low, the blue one, that's the primary trend. Then you look at the secondary trend where you basically have this. It's an interesting way of viewing price. Basically, what you're doing is you're viewing price through indicators.
Jonatan.
Victor. Oh, yeah.
How are you doing?
I'm good. How are you?
I'm okay.
You sound great.
Here. I sound great. Yes, I am. I'm at my best shape, as you can see. How is everyone watching us today? It is the last hour of our stream. Jonathan, I think this is very interesting because one of the, I think, right, after years being a trader, one of the most basic but most difficult things for any trader, but especially someone who's starting out, is understanding market structure and getting a feeling of filtering out the noise and watching the actual, or sensing what the market actually wants to do. You do that with market structure, with breaking significant lows and highs and so on. But it's difficult for someone who is not accustomed to trading to filter out the noise. And what you just did, I think, could be very helpful for a starting trader, or maybe even someone who's not even who's been at it for some time. filtering out the noise, and of course with indicators, and this is what the critics of indicators will say, it's delayed, right? Indicators are lagging, and yes, and that may be so, but the added clarity might make up for that lag that you might find, if even if you're late or a little bit late, but you have the right direction and you have the right timing, those are huge things to have on your side.
Yeah, definitely. I think it's also an interesting way of. I mean,
By the way,
obviously.
someone asked, why am I masked? It is to protect you. Yes, this Kavika knows me very well.
Yeah.
I'm a bit under the weather, and that's why I have this mask. The mask is for your benefit. It's for your interest.
So, by the way, I'm adding an alert on this trend line right here. If price breaks below this trend line, I want to be alerted as well if it breaks below that low. And because now, as I explained, I'm looking to get in on the major pivot points. And if we look at Euro GBP here, we can see that it has moved like this, and is creating a pivot point and range. And I'm looking for perhaps either a move down here or a move higher. But the first step of breaking the structure would be to break this trend line and that low. And I would then look at perhaps indicators like, again, looking at the MACD histogram and RSI and things like that to see if I can find deviations, which I can't really find right now. But this is something I'm potentially watching. Victor, I gotta take a phone call quickly. Is that okay?
That is perfectly okay. And if not, I will send you a message
All right,
to come and
perfect.
rescue
I'll be
me.
back soon.
So let me put my screen. Oh, there we go. You put it right there. Thank you, Jonathan. Yes, as you can see, my voice is a little bit different than usual, but we should be okay. All right. It's not the end of the world. And if it is, then it's the end of the world. So it doesn't really matter, anyways. All right. So I'll try not to laugh because I noticed that that would make it worse. Okay. So what are you guys watching? Are you guys in any trades? You watching us right here? Share us with us if you're in any trades. We can look at it together. I'll show you something that I have been looking into to get a trade, but I didn't get a trade. It didn't signal. But you can understand how I trade. And maybe we can actually break down euro dollar, um, what's happening, even though it's not signaling to me, what you could, maybe using your strategy, using your signals, can still get a trade in, while I might not be, but because of how I break it down, it can give you a little idea, a little indication of what is more likely to happen and what not. No problem, no problem. All right, so um, let's take a look at pound dollar. GU short. Yes, yes, indeed. GU short. That is exactly what I was looking for, right? We hit the target already a couple of that. This was on Thursday. We reached target, and the target was based on the reversal from the daily quasi, right? The daily quasi. We had that reaction, and actually the reaction was here, and the low of that swing point before was the target, and that was reached already. So the bigger the bigger pattern has been, this being the bigger pattern. Let me show you guys. The bigger pattern was, let me make sure that I got it. All right, so this is the bigger pattern that has been already completed. That's the break of the neckline. It goes all the way down and it comes back for that entry order block, right? Once you get that their reaction, the first interaction we had with that order block didn't signal us. You can see that the size of the let me mark it. So you let me zoom in so you guys can see what I'm talking about. All right, so here you have it, right? You can see that we did have a very nice reaction from an area that makes sense. right? So the market is reacting to the structures. That's a good sign. That's what something you want to be. That's something you want to see. And the however, the it wasn't clear, or actually it wasn't evident that the sellers were gonna come in yet. If you compare these two candles and actually all the candles before that, you can see that the sellers didn't take control until these two candles right here. You can see how the market came in, creates that engulfing. That's the sellers taking control and pushing price much lower than the open of the previous bar, indicating the first sign of sellers taking control, right? So once you have that quasi being created, it tells you right here, it told you right here that the likely area that actually the quasi has signaled, if that is one of your signal. You can choose what signal is, what is a valid signal for you, if that's an engulfing, if that's an outside bar, or maybe something else, right? It's up to you, as long as you choose a price action phenomenon or behavior that indicates sellers taking control, right? So and the target for that move was here, and we reached it very beautifully a couple of days ago, Thursday to be precise. That's done. That reversal pattern is done. And actually, I haven't gone to the higher time frames, but just so you know, we have multiple structures here. I haven't, started from as I typically do, from the monthly time frame, but we have plenty of reason for this move to have some more legs, right? So you have the fresh order block on the monthly. You also have the weekly that was retested, which is exactly the entry on the daily as well, as you can see it here, right? That's the move that was retesting the weekly. So you have monthly, weekly, and daily all telling you, daily being more precise with its quasi, indicating that the likely area, at least from the daily perspective, is to hit that low, which we did. Now the question, of course, is, what is likely, where is the market likely going to next? That's on our mind all the time. Let's take a look. So once we reach the target, the quasi to the left is no longer relevant because the pattern has been completed. It's done. I understand that the classical way of using the head and shoulder, right, is for this to be the completion, right? So this is basically the that's not the tool that I was looking for. Let me mark it like so. The completion of that that's the head and shoulder, right? So you have the left shoulder, the right shoulder. This is the head in the middle. The completion of that classical head and shoulder, although I would like just to call it quasi because it's not that symmetrical, is that you would expect, it's a reversal pattern, so you would expect price to continue to go to perhaps that low or even lower. But I don't use it that way. So the quasi for me, once it's finished, once it's reached target, it completed the pattern, I let go of it. I'm only interested in trading from the right shoulder to the end of that pattern, which already happened. So to me, I will not use it further. So, but I understand, right? So we understand that the pattern was closed, but here we are. Let's take a look at the weekly. We are at a weekly demand zone, right? Which is this bigger area, where we have a daily as well, which was, let me indicate it here. The daily is actually a little bit lower. I'm not sure why it moved. Right, the daily is a little bit lower. We haven't reached that yet. So even though we're on the demand zone from the weekly, the daily hasn't been tapped into. So basically, I'm going to ask myself, if this is going to have a little pop, a little reaction, where is it going to come from, right? And the only answer is the only structure we have visible is the one up below here, right? Below, we haven't touched it yet, meaning that the market would, if it were to be using that structure, it still needs to travel some more to the downside. Okay, so that's one thing. But that's a little bit, swing trading, a little bit zoomed out on the when we look at, so coming from the daily, you would expect, right, to look for a sell on H4 to align that with that expectation on that daily that we just saw. And if we look at the, let me mark this and move this away since it's no longer relevant, that target, we can see that the market created a fresh order block on the H4 and retested it quite beautiful, as it a lot of the times does, right? And that was to me the area to be getting in. Let me move that back. Actually, that's no longer valid, right? So this is the structure on the H4 that I would be. There was a bullish structure as well. However, since you have the daily telling you that a likely area is a likely direction of prices to going to the downside, you want to be looking for H4 structures that are aligned with that, right? You don't want to be trading something on the lower time frame that goes against the higher time frames. Sometimes you can still get a trade from, but they're likely not long lived, right? They're not going to last long. You're not going to get the full move, because at some point in the future, that higher time frame will start to kick in and will push price lower. So what we have here is the H4 order block was created right there at the beginning of London, and we retested it. If we go to the H2, you can find another structure, actually not that one, this one, right, which indicated possible areas where price could come to, and that's exactly what price did. Price came back, and that was the area that I would be looking for to get my entry on the 15-minute. Maybe there was something. No, there wasn't anything on the 15-minute. The quasi to me would then be to look for reasons, right? So that would be the actually would be all the way down here. This will be the established uptrend, break of that neckline, and it comes back to retest where the overlap of those two hourly order blocks to move back and presumably to complete the structure again, right? So that's the pattern. However, it did not trigger me, right? If you look at the area on the, let me take it out, right? If you look the quasi that we have here, there was nothing to the left, right? Actually, it was, but it didn't get to an area of interest. Let me mark this for you guys. Remember, we are we are very close getting to 100 subscribers, but we need your help. Yes, let's make it as a group effort. Let's be part. You want to be part of history? This is your chance. Be part of our initiative, of our movement, bringing good example to traders out there. All right, so the what I would be looking for is from the from the head, right? This is the let me mark it like so, right? So that is the established uptrend, break of that neckline, and it comes back for the possible area, possible reversal, I mean. But I was looking for the quasi any structure to the left above that 50% retracement, and we only have one right here, and we didn't get that high, right? We had a reaction, and maybe in the future we can still use that, although it looks like we're not going to be using that. Price already rejected the area of interest, and we started creating new quasis on lower time frames, right? That's how the market moves all the time, right? Makes an established uptrend, breaks it, and it may still come back, but it looks like it wants to continue, perhaps something like that, right? Price already, depending on what's happening out there, it can still change. But in the lack of in there we go, Jonatan. How are you?
Hey,
Hey, so yes, as I was saying, I didn't get an entry because there was nothing to the left, and the only structure I had wasn't tapped in, and that happens. And that's just a choice that I make to only trade where there is alignment on the higher time frames and on the hourlies, plus the quasi on the minutes, right? Needs to give me reasons to get there, and I couldn't. There was another. I could. There was another way to get in, which is after we had the retest of this structure right here. I could go into the 1 minute and look for reversal patterns that would give me that entry signal, but they didn't. Right. This is the actually the quasi, and we broke that neckline here, but so far we haven't had anything. Actually, we could mark the possible areas because it can still be it can still trigger us. Let's do that on the 1 minute. Maybe there is an entry on we can take live with you guys. Let's take a look. We have the quasies right here. On the 5 minute, we actually have a quasi as well. It reaches right here. And let me mark it so you guys know what I'm talking about. How's your gold trade coming on, Jonatan?
Good. Let's see. Yeah, it's moving higher. We're getting into new all-time highs here again.
Great.
I'm
Gold is unstoppable. It's a juggernaut. It's the it's a giant moving through the forest basically.
yeah,
Unstoppable.
I'm a bit. So this is actually an EA trade that I got entered into, but I've I changed the. So what I did was I changed the take profit target because I thought
only for this trade or
for this
also
one because I
okay.
thought I got a good entry.
Uh-huh.
I got a good entry, and so let me go over to my screen here. I can show you the actual setup. Yeah, so this is the trade. This is the entry. This is the stop loss, and the original TP is here. But I mean honestly, that's a very good trade. It's a 2.2R, but I'm also looking at the fact that if this actually continues and we see that we have like a move that is similar to I don't think we're gonna have a move that's similar to this, but maybe
I'll be right
here.
back.
Okay, sure. Okay, so for those of you watching, what I'm looking at here is from that low, or actually I have to measure the breakout. So from that breakout to this high, 2.71%. From that breakout to, let's say, that high, 3.46. So let's say we take the average between say around 3.2 or something like that. So if we're going to see something similar, you might get a move that is closer to like 3%. We go to the log scale at okay, so that's the log scale. So here we have a $100 move, $130 move. So let's assume that we could perhaps look at a 120, and that puts us around that level, right above the minus 0.382. So the trade I'm looking at is that's the original trade. The TP I have for this one is up here. And I'm thinking that might actually be getting a little bit too greedy.
Too ambitious, yeah.
I think that's a little bit too ambitious. So if we try to see we can basically look at this. It took
Fact is, though, gold has been unstoppable.
yeah,
Um, and not only that, we can see that it's been very, very impulsive. It does not. It is not coming back to retest structures, demand zones. It doesn't need to. It's so impulsive. It just continues to go on and on. And when I see price action like that, I'm thinking about of a blow off top, even if it's just temporary. And if that normal price action is not gonna be what we're gonna see, if that's going to be the case. It's gonna be just erratic, not erratic, but irrational, just going up and up and up in the last phases. So I would think, yes, your target is um, a little bit ambitious, but hey, the gold has been like the bulls coming out of the gates at Pamplona, right? Unstoppable.
yeah, and I mean, if I would have shown you, this setup, you would have said that that is probably
Exactly.
yeah. But so what we have here is the average move. Looking at these, the average move. Now it's only three. The average move is 183 points, which is about 4.9%. So if we would, so this is basically from the low to the high of these moves. If we take it from that low and then we project upwards, let's say 4.9% or 183 points. So that's 183 points. Now, of course, the more expensive, the higher we trade, the less percentage change this dollar move will be. But that's right here is 183, around that area. That's going to be that one. And then we can look at where is the 4.8%. 4.9. Well, it's going to be here. So it's very close to each other, obviously. Now that should be where the target is. So my target should not be up here. If I'm trading this trend and I'm assuming that the behavior of the trend remains the same, then I should be looking at a move towards this area, perhaps to hit this level right here. Now, interestingly enough, the EA actually put the original take profit target for this one was 4,127. It's right here. So I'm actually going to change it back to where it was originally because that makes a lot of sense. Yeah. Yeah, the target of this move, if we look at the behavior of the previous trend, then 127 makes much more
What
sense.
target are you talking? Where are you putting it now?
The original and new target, the original target for the EA is 4,127.
Okay.
I'm actually going to change it to that.
That's within reach. If you look at the lags, I mean, that's nothing for gold. It's looking at what it's done so far. It shouldn't
Yeah,
be.
but then I'm thinking, yeah, if that's nothing, then why not just increase the TP? But
Yeah.
I think
There-
I need to.
there's something I didn't want to say because you're in the trade now, and maybe I should share it
Yeah.
with people in the audience. Let's mark it. Let's move it. All right. So this is what I'm seeing on gold. Right. We have had, if we break down the market, gold's market, we've had a consolidation, and then a breakout and another consolidation, and we're currently at the end of the second or the last breakout so far as we have seen. So, and if I consider the lowest point of the last consolidation to the highest point of I'm sorry, not the last consolidation. This is the last one. The one before that, the low to the high of the last consolidation. And if we use that as a, as a projection for, use the fib tool for the projection, it gives us for an equal move 4083, right? If the market is not accelerating nor decelerating, but just keeping the same speed, then 4083, which it already passed today, would be the case. However, we can all see that the market is more is accelerating. If we look at the number of bars that it took from the last breakout, right, to the next consolidation was 16, and it moved the same amount from the current in only 7 bars. It traveled the same distance as the first breakout, meaning we're not decelerating and we're not keeping pace, we are accelerating, meaning that, it makes a case that is going to be bigger than the previous leg. And we already, this is 100% the previous leg, where they're right there, and that's 4083. It's a good assumption that it's going to be more. How much more is difficult because these are projections. um I haven't gotten to analyze or project what is reasonable to expect, but I think your target is within reach. I mean the EA target.
Yeah, I think so as well. And yeah, wow. I mean, when you look at the weekly here, it's
That's the previous move, the previous breakout from the lowest, measured from the lowest point. And if you do the same, we have reached 100% the previous move. So basically, and we've done it quicker in less bars, meaning at a faster pace. It's likely it's reasonable to expect that the market is going to expand a little bit more. We're still in the accelerating phase. We're not decelerating at all. Also by the looks that it had before some red candles, meaning it needed some time to take a breather before continuing. That's not the case this time around. It just kept on going and going and going, and with bigger candles. Yes, there is one big day here, but if you compare the rest of the other candles, you can see there are multiple candles that are bigger than the average from the previous leg out. All of these things indicate, at least it makes me think that it's reasonable to expect at least 100%. We already reached that, so and even a bit more. How much more is difficult.
yeah, it's of course very difficult to, but no, I'm gonna keep it open. I think that original TP is good enough, so I'm gonna keep it
It's weird
where.
though, on the fundamental side, that gold is still bullish, while a big driver, if we're following news, the big news of today was, right, the release of the hostages. That's a big breakthrough in the conflict in the Middle East, and gold is not reacting as you would expect, right? Middle East conflict, that is one of the drivers you would think fundamentally for gold. You would think it will have some retracement, but it's not doing that. It's breaking and going into all-time high. What is your take on that, Jonathan?
So now again, I'm not an expert fundamental analysis, but I am working on it. So gold seems to be rallying now because of the what's called the debasement trade. Basically, it's so investors are seeking protection by, well, I guess it's institutions and central banks basically trying to protect themselves from governments devaluating the currency. If you look at the US dollar, for example, it's you know um, decreasing in value, and what Trump is doing with trade is a big fear, and then potentially Fed independence being threatened will also potentially threaten the security and the strength of the dollar. So governments, central banks are buying a lot of gold also because of what happened after the Russia invaded Ukraine.
Mm-hmm.
Because you had a lot of Russians' assets were seized, like foreign assets were seized, and that's always been something like you don't really touch another country's assets like what happened when the Russian assets got freed. So governments kind of panicked and said like, well, if they can do that to Russia, they can pretty much do that to anyone. But buying and holding gold, you can't really freeze those assets. Gold is a very hard asset, and it's safer than fiat, basically. So I think that's really what's driving the gold rush, so to speak. Not the situation in the Middle East. I believe has nothing to do with gold fundamentally.
All right, fair point. Yes, and it shows, right? It's not reacting on the good news on the Middle East front, so it must not be. That's the conclusion, right? The conclusion is that it must not be the driver of gold's ascend.
Yeah, but it's like, yeah, it's it is for someone that just understands like for myself, I understand the basics of you know what, I wouldn't even say like the basics. I understand something about fundamentals, and that is that the dollar is a safe haven asset, just like gold. Gold is a safe haven asset. So in times of uncertainty, people would be accumulating gold and also going to safer assets like the dollar. But now the dollar is not safe anymore. And it doesn't seem like it's safe anymore. The only safe option that people or the governments have seems to be gold. And so even if we're in a bull market, when a risk on environment, and we're in a bull market, the stocks are rallying. In that scenario, in a risk on scenario, gold should be falling, right? Because investors are no longer looking for safe assets; they're looking for risk assets. But
Mhm.
gold is being accumulated by governments because government now understand that we need to hold as much gold as possible because our fiat currencies are at risk. And I think that's the whole currency debasement trade. But the thing
And
is, like now, yeah, go ahead.
no, and crypto, with the 19 billion liquidation we saw last Friday, isn't a good candidate yet for gold.
No, no, absolutely not. I mean, you say crypto, right? But it's important to understand the
Bitcoin.
differentiation,
I mean Bitcoin.
differentiation between Bitcoin and crypto. There were 19 billions of liquidations in the crypto market. Now, if we switch to my screen here, I'll show you what this actually means. So, if we go to, let's say, okay, so here's Bitcoin. This is this is not really a market crash. You can't really say that there's a crash in the market when prices are just trading at the same level as it was 2 weeks ago. You know, it's basically as prices rolls back 2 weeks. So it's like you have the same amount of money that you had 2 weeks ago. A market crash would look more like something like this. That could potentially be categorized as a market crash because then it's lower prices than what you saw 4 months ago. It's now a different market structure, everything's different. But if you go into, we can go to Ethereum, which is an altcoin. It's a bigger drop, but still arguably not a market crash. I mean, on the bigger scale, nothing really changed. But now look at what happens when we go into altcoins, excluding Ethereum. This
Is this a
is
basket of altcoins excluding Ethereum?
no. This is just altcoins. This is just individual altcoins. So
Okay.
here's Syrup, for example. That's a crash. That's a flash crash right there. You can see prices went down, almost 40% in a day. But this one right here went
Wow.
down 80% in about 5 minutes.
That's a crash by anyone's definition.
Yeah, and here we went below the April lows. This one right here had a crash of almost 60%. So all of this happened in the altcoin market, and that's because the altcoin market and the crypto exchanges dealing with all the altcoin markets, it's very low liquidity. It's very not a very mature asset class. But Bitcoin. So first of
So
all, if you help,
basically, what you're saying is that the liquidation wasn't Bitcoin being liquidated; it was the altcoin market being liquidated last Friday, the scare and the flash crash and all of that. And you're saying then, do you think it's still making a case, a good candidate to compete with gold as a safe haven asset, Bitcoin that is, now that perhaps dollar might losing erode its attractiveness as a safe haven asset?
I think the currency debasement trade is spilling over into Bitcoin. If we look at, we have a basket of capital going into the debasement trade. Maybe 97% goes into gold, but those 3% might spill over into Bitcoin. From the
Okay.
like obviously not from governments. I mean, governments accumulating gold is going to accumulate gold. They don't care about Bitcoin, but the institutions might actually have some interest in putting a fraction of the investments that they're planned to put into gold into Bitcoin. And if
Yeah.
only 1, 2, 3% goes into Bitcoin, that is it's a big amount of money. And also we're looking at Bitcoin now. It's a much more mature asset than what it was before institutions entered the market. And I mean, if you look at, on Twitter, we see all these anti-Bitcoin, anti-crypto folks, all the legacy financial analysts that maybe, financial advisors, things like that, that absolutely despises crypto for all it is. They are clumping together crypto with Bitcoin. So crypto is Bitcoin. So when they say Bitcoin, they think crypto. But for me, when I say Bitcoin, I mean Bitcoin, and everything else is crypto. So uh, they're saying like, oh, look at the massive liquidations. This is not an asset class worthy of the respect it's getting. But we have to differentiate between Bitcoin, which handled this very well. Okay, gotta remember 19 billion liquidations. That's more than nine times more than the liquidations in the COVID crash. If you go back to look at what actually happened during COVID, it was here. Like now, this is one of the worst crash I've ever seen in Bitcoin in my trading. If we go from the highs here to the lows, that's a move down of 63% in a matter of 3 weeks. In 3 weeks, the price of Bitcoin dropped 63%. And I was trading this live. I remember this very well because I believe we had a live stream with Dirk just around this massive drop right here. Now, you look at this, and this is a crash. This that we had on this Friday, it's a crypto crash. It's an altcoin crash because of the mechanics that is running the crypto exchanges. But Bitcoin handled it very, very well. I would actually argue that the structure that we're seeing on Bitcoin here with this crash looks almost better than what we had on the S&P 400. If you look at the S&P 400, now this I don't like because this is breaking structure. This in relationship to the trend is an insanely large candle. If we go to the log scale here and we measure this, we have not had a move in a single candle like this since we had the April tariffs. And so Bitcoin, I would argue, handled this better than what the S&P 500 actually did.
So actually, that's a plus point. I mean, that's a sign of maturity for Bitcoin.
Yes, yes, absolutely. I think it is, and there's also this argument that the 4 year cycle for Bitcoin has ended. So the classic 4 year Bitcoin cycle is defined by the halving dates, right? Where you have every halving is every fourth year, or if it's every third year, and then you have a bear market after, and that's the 4 year cycle. I can't remember exactly, but it's um,
But do you
the
mean we are at the end of that cycle, or that cycle no longer applies?
I don't think that cycle applies anymore, because I do think that right now Bitcoin is shifting to a more it's shifting from a retail hype driven to a more of an institutional liquid asset that
Yeah,
move.
you actually, I was gonna say the difference between the crash that you mentioned that you were trading and the liquidation we had on Friday. The big difference was, I think, is the fact that now we have all these ETFs and we have all these institutional channels to throw money and inflows of money into Bitcoin that we didn't have before. And that's these pension funds, they're not traders. They're buying and holding for months, years, and they're not getting out. They're not being scared or anything. They're big, tankers moving very slowly. And I think that's good. That's it makes Bitcoin an asset you can store wealth in.
Yeah, I mean 6% of I think it's 6% or more of the total supply for Bitcoin is in ETFs. So ETFs are a big part of the market. We've seen weekly inflows into BTC ETFs of like 60,000 Bitcoins, which is a lot. So I do think it's that correlation is coming closer to the NASDAQ. There's more institutional adoption within Bitcoin, which makes it stable. There's more money. There's more ETF holdings. There's more long-term holdings. There's less short-term speculation, and eventually, it might actually. I mean, I do think that 4 year cycle, because of that, is has ended. Now the question is, what does that mean for Bitcoin? Does it mean more volatility? Probably not. But then you have to ask yourself, like, what is volatility? And like, well, it could just be that I don't know how to explain, but you have like absolute volatility where you're looking at the asset going like 100% plus and in doubling in value. But you also have what I would call relative volatility, the volatility based on the structure that you're trading within. So you could look at, for example, Bitcoin doubling in value. It's a 100% move. Obviously, very high volatility. But from a trading perspective, like you look at Euro USD, for example, Euro USD moving 5% is extremely volatile in comparison to the overall market structure. So Bitcoin might have a phase where it's not very volatile in percentage terms, but it might be active in terms of price movement, which is also a type of volatility.
I understand. Making it not jumping around in volatility too much, because that's what make any asset dangerous, right? When it changes in volatility too much. Once, for example, if you have EU that normally makes, I don't know, goes 70 pips on any given day. If you were to measure volatility in terms of ranges, and suddenly on any given day it goes to 200, that's dangerous volatility, and that's different. Is that what you mean, that Bitcoin is now going to be more uniform in its volatility, making it more stable, still volatile, but stable within a certain range?
Yeah, exactly. I think it's going to become more stable. If you look at the like this long-term chart right here, if we look at the lines here, the Bitcoin logarithmic regression, if Bitcoin is now, we have to
GU is
also,
falling, by the way. Just for those who are
okay,
watching,
let
GU is after touching the H4 order block that I was talking about, and is basically just having, it seems to be getting ready for a next leg down.
is that GU?
GU, yes,
Interesting. I wonder what
in the lower
would
time frame.
happen. So I mean, I'm looking at EU as well because I think
I didn't break EU today down, but EU broke in a daily structure. That's a bearish sign. That means that we could go completely, not completely, but straight down. I mean, the next leg down, or have a little pop, but eventually also go down, is more likely to happen because we broke that daily structure that was supposed to hold us and have, some kind of a reaction. We firmly close below that, indicating of more likely lower prices in the coming sessions. And
this looks very bearish. I must say,
it
EU
does, it
looks very
does,
bearish. And
it does.
I'm now thinking, are we actually watching a quiet? Let me, by the way, just replace this dollar, the Dixie here. Let's see. I need to replace this in the watch list here. So what I'm thinking now is, are we potentially actually watching a quiet bottom being formed here for the dollar and a top for Euro USD?
Why do you say quiet? Because it's
Quiet
slower.
because no, it's quiet because I fundamentals, from what I understand and from what I've seen from a lot of analysts, the fundamentals in the macro is pointing to more dollar downside. And but if this is the bottom for the dollar, this is also the top for Euro USD. So and now I'm looking at this and I'm thinking, okay, we got, where's the pivot point? We got one here, and now this is the one we're printing right now. We obviously see a huge move to the upside, sharp drop, big move to the upside, sharp drop, big move to the upside, and then a sharp drop. And we're making that sharp drop right now, which also means we're getting close to potentially breaking the structure.
Mm-hmm.
So if
Yeah,
we add,
it's the possible reverse coming in is still, I would say, still in the making. If you look at the daily and the weekly, so there's still, we can still push higher, but if we start breaking these lows in the coming sessions, we will start making and creating some real damage in the market structure. And even if we push higher later, it's going to just, presumably only going to be liquidity sweeps before a continuation to the downside. That's how I would look at it. And I think we are definitely seeing what you're referring to, where the market is no longer, we're basically, we have a change of character, right? We're breaking structures, or at least we're threatening into breaking these structures soon on EU, on the higher time frames. And if that were to happen, we are, we're going to be in a different, um, no longer in an uptrend.
no, but the difficult part from my perspective here is, I'm trying to figure out where the trade is. Maybe the trade is not on EU, maybe it's on GU or something like that, but I'm trying to figure out where is the where's the bigger move? Like I explained previously, I'm looking for the bigger pivot points, you know?
Mm-hmm.
So if you look at the weekly, to me, this looks very much like it could be that type of distribution. So we have accumulation and then distribution up here. And my target for a move to the downside would be based on the dollar currency index. So if we add the dollar currency index here, that would be the bottom for the dollar currency index down here. And obviously then it would be that one. So let me remove that for now. This is the first support. But from a swing trading perspective, I don't really see the it's quite bad risk to reward here.
Hmm. I'm
So
going to go ahead.
now go ahead. Go ahead.
No, I was gonna say I'm going to show why do I think the possible, if there is a reversal coming up on dollar trade, right? EU, that could be GU. The end uh of dollar weakness. Let me switch to my chart. And on the higher time frames on the Dixie, we have um the market has been um, on an uptrend, right? That's the weekly time frame, so it's going back a couple of years. We had for some time we had a consolidation and a fake breakout to the upside. That failed, and there was only a liquidity sweep afterwards. You would conclude, and we broke to the other side as well. So this would be called a turtle soup for those who are trading that kind of move. It's on the monthly, but still, right, taking liquidity on one side, it creates a monthly bullish structure and a possible, we don't have it yet, but a possible confirmation with the creation of the next monthly within that demand area, a second one, right? That would confirm the first one, meaning yes, the buyers not only um, indicated they wanted to come to the market and they came, but they also retested when the market was retested. They confirmed that they are in all seriousness going to defend that area. If you go to the weekly, what I would like to see is, right, if we're going to have a reversal, of course reversal can happen in any way, right? You can have just a big shot in one direction, and that's possible, but it's not likely. What we more likely see, especially on the higher time frames, is that the market will break a structural high, and that is what I've indicated here. These are the necklines of a possible quasi, and it hasn't broken it yet. And even after we break one of them or both, we only need to break one. We still typically would still have a push down, meaning we're still in the early phases. The quasi hasn't been formed, and even if we were to create one in the next couple of weeks, we are still in the early phases of the market, perhaps breaking a structure for later on changing direction and getting in. So we're still, it's still too early to say yes, we are in a reversal pattern or not. We are. It looks like we are. It wants to break that level, which would mean, and only if and when that happens, we can start thinking, okay, we are breaking structure. Now let's look where we could be getting in something there. That's the area that I would be interested in getting in. You will have to translate this into EU to watch what level that could correspond to, so you can get in on this massive trade on EU or GU, whichever speaks to you best. This order block, by the way, is not the area anymore. That was before. Since we this will be the quasi right now. Let me indicate it with some lines so we can, all those watching us can watch. These are the pivotal points and the swing points that has been made by the Dixie, and we should wait for the market to break at least this one, and then perhaps get in on the this possible move for that continuation, for that reversal. So it's very very early. We haven't even broken the neckline yet. Uh, so yeah, still, that's what I mean. It's still, we're the early phases of a possible reversal.
Yeah, it's still very early. We don't really have the breakout, but it would be a shame to not be able to make money on an idea that I've been watching for so many months, and that's why I'm seeing that we potentially are making progress towards a dollar bottom. So for me, it's now about finding finding currency pairs that where I can trade that USD bottom scenario with
Yeah,
a much better risk reward.
painted, I drew the same structures on EU for everyone to have an idea. This is the neckline. We're still, it looks like we're going for it. I don't see anything to the left that could stop us, at least not in this time frame. So I think it's quite likely we will take it out, or it is within, the realms of possibility. And if that were to happen, then we have the first sign of a possible reversal. And to me, I would wait for the retracement into some area of supply and get in, then to get in on that possible, possible reversal, which could be a huge trade. We're talking about hundreds of pips. It's going to take, months to completion, but that's how it goes.
Yeah, that's the one I'm looking for. I'm looking for those 100 pip moves.
So do you think no, coming back to Bitcoin, so do you think the fact that Bitcoin withstand and wasn't tainted by the altcoin liquidation, do you think that's a bullish sign for Bitcoin going forward shortly?
I think that will not, that specific scenario will not affect the fundamental reasons for Bitcoin to be bullish or bearish, but it does show that Bitcoin has matured, which in a sense long term might mean that it has better appeal to institutions and ETFs and things like that. What happened with the altcoin market, I think, was a mechanical failure on the exchanges parts.
Mechanical, you say?
Yeah, so I don't know the details of it all. We had a discussion this morning, me, LJ, and Dirk, about it, and crypto exchanges does not operate in the same way as traditional exchanges do, and they
don't have circuit breakers.
No, they don't have circuit breakers, and also a difference is crypto exchanges, they are also invested in the crypto market, which means they're invested in the crypto market. So when the prices of crypto goes up, the exchanges profit from that, which means also there are certain projects that exchanges wants to accumulate. So when the prices of those products drop, the exchanges will of course fill their own bags before the clients, because it's in their interest. So there are some potential conflict of interest with some crypto exchanges. I'm not going to say every crypto exchange, but and also there's this mechanic called auto deleveraging in the crypto space, where I don't know the exact details of it, but that was one of the reasons why we saw these flash crashes.
Okay, That's a huge issue though. If the exchange have a directional exposure in the assets they are offering, because they have incentives for one thing above the other.
So we have to understand that the altcoin market is a casino. That's just all it is. It's a casino with 1,000 times leverage, and people that gamble in the altcoin market with leverage, you have to make sure that spot. So it's important to remember that no one that held spot lost any money. The only people that lost money this weekend in the crypto space was people using leverage. People on spot did not lose anything. If they're lucky, they might have actually filled some orders lower and got some really good entries. The altcoin market, from my understanding, is very low liquidity. The books are very thin. When the market makers leave, there's just nothing there. There's just nothing there. It's just vaporware. It's just nothingness. So when there is a crisis and you're using leverage, you're gonna get a margin call, and unless you own the asset on spot market, preferably on your own wallet, you're gonna lose your money. Simple as that. This is not the stock market. This is the wild west of finance.
You mean the music stopped and there were no cheers for a lot of
Yeah.
people?
So it's basically what happened. We had a time where it's like everyone's running, like everything's running to the upside, everything's fantastic, everything's beautiful, everyone's making money, altcoin markets are pumping left and right, and then all of a sudden, massive panic hit the market, and mechanics within the exchanges triggered a massive sell-off, and everyone that was leveraged long lost their position, while the hodlers or the long-term investors invested in the spot market, or on me, for example, with the ETFs and everything, didn't even notice.
Yeah, I can see that. We have sadly we have come to the end of our first episode for this week. It is with great pleasure that I take part in a team like this, where we're coming to the markets and showing the audience, as it is, how we trade, how we
Yeah, great
think
stuff.
about the market. I love the free form format we have. And actually, I would like to invite those who are part of our Discord community to join us in about 45 minutes, where we will talk further on EU, GU possibilities, perhaps even watching the trades that we're showing right now for possible entries. So join us.
Yeah, that's right. Thank you everyone for joining, and very good live stream today. I did really appreciate it. Everyone joining. It was really great fun. 4 hours of live streaming today for myself, but it feels like I've only done an hour. So yeah, very good, very good day. And hope to see you all tomorrow. So make sure you get back tomorrow, and we'll continue this trading journey that we're on. All right, see you guys, and take care.
Bye bye.